All right, so I'd say we get started. Let me put up my headphones. All right, I think everyone is able to hear me now. All right, Discord's open. The YouTube live stream is going as well. Beautiful. All right, so I'd say we. Okay, I have to mute Discord, otherwise we're gonna hear. Otherwise, we're gonna hear everyone talking. All right, guys, if you have any questions during the stream, just send them into the live chat on Discord or on YouTube. I will be checking both chats the whole time because this is more or less going to be a, yeah, you could say a question and ask round. I'm going to do some charting and we will see how the price action today on the DR IDR is forming on today, December the 28th. Yesterday I was not on the charts because it was my birthday. So we will see what we get today. All right, the live stream's going. All right, perfect. The screen is all set up. Beautiful. This morning I traded GBP USD actually, but not using the DR IDR. I was using my own strategy. Oh, beautiful setup actually. Beautiful continuation. What's going on here? Why are my numbers hidden between my bar? Okay, it doesn't matter. I made my 2% profit this morning on GBP USD using my own strategy. I bought it right here. As soon as we retested the VWAP, we got a beautiful stock RSI crossover. Here we have it. I did not take any of those trades because I already hit my daily profit target of 2%, which was hit very quickly within a few minutes. But I'd say we move over to the SP500 chart, the futures chart. ES. Thank you very much. All right, ES 500 futures. Let's go for the ES1. Let's get rid of the volume. We don't need that right now. We are going to put the DR/IDR indicator on our chart. And we are also going to, oh, there must be a new Per Dynamics Auto Trader script. I'm going to be checking this one out later. Tick grid right here. I'm going to put the tick grid on our chart as well. All right, I'd say we are gonna get rid of the standard deviation lines. We are not going to look at them right now. We are only going to be analyzing what happened during the price action over the overnight range and over our post New York range, basically during the Asian kill zone. So as of right now, we got a beautiful setup actually here. We had our post session range right here, the Asian range. Let me mark this up. Asian DR IDR right here, and we closed above with those closes right here. Yeah, we're already on a 5-minute chart, so we consider this a bullish market according to the Asian opening range, basically here from 7:30 until 8:30. We close above, so we would only be looking forward to take longs from here. And we got a beautiful retest of our DR/IDR low once and twice again, just prior to the London kill zone right here at 1 a.m. New York local time. So we had two beautiful retests, one right here and the other one around here. This took a little bit longer, so you actually had 5, 10, 15, 20, 25, almost half an hour time to get into the straight right here. Right around midnight, it depends where you live. If you're, for example, like me from Europe, you won't really be able to take the straight right here because that's when everyone's most likely going to sleep. If you're right from America, you might have the chance actually to trade the Asian range right here, but most of the time there's not lots of movement happening. So if you would have gotten in here, let's say you would have placed your entry right here on the DR/IDR and your stop loss on the 50% level, looking forward to target at least those highs right here from the Asian range, would have worked out. It would have taken some time, definitely, but it is what it is. So let me color those two retests in a different color. Let's make them orange and make this one green. So we had our bullish confirmation. We retested the DR IDR slow actually, and we can also draw a Fibonacci from our Asian range. Let me quickly go for the DR IDR range. Yeah, that looks all right. So actually, if we measure from this move right here, this impulse close above the DR IDR range right here from the Asian range, we see that we pulled back just below the 50% level and then took off on our rally right up here. So if you would have gotten into the straight somewhere around this area, let's say you would have placed your entry on the DR high and your stop loss, let's say on the 50% level of the DR IDR range during the Asian kill zone, basically right ahead of London, you could have scored at least, let's go for the 0.5 standard deviation, a 4.5 risk to reward trade. Very simply, very easy. It's pretty much out of the textbook. We also had fair value gaps sitting right here and right here, from here to here. Did both get hit? That's a question now. Hang on. Both of those fair value gaps got hit, even lower one right here. So we are going to mark this up. Let's use the, what would be a good color for the fair value gap? Let's go for gray, maybe. So we hit this fair value gap, so this would have also been a really good giveaway that we are going to bounce basically from our Asian DR IDR range right here from the IDR high, basically this red line. Very beautiful setup. We can also use the volume profile. If you've guys been watching my streams, you should know that I'm a big fan of the volume profile to look for fair value gap confirmations. And right here you see there has been plenty of volume being put into the market somewhere up here and also down below here. But right here, if we really zoom in here, let me zoom in here, we see that we had a volume inefficiency right around this fair value gap. So if I'm dragging this out, you guys are actually going to be able to notice it. Let's make it in a yellow color so it can stand out a little bit more. And this fair value gap is basically reaching up all the way up till here. We see that in this upper fair value gap, we had actually more volume than in this lower one. So right here, we see that we had also a confirmed volume inefficiency in the market that has been retested once, formed a doji bullish engulfing candlestick, a pullback to our DR IDR high, right here, with a up close candle, right followed with a basically a consolidation within a, I'd say a 50 tick range from here to here, pulling back again into this fair value gap, tapping into it once, twice, 3, 4, 5 times, followed by a bullish engulfing candlestick, continuing to basically on its move to the upside. Let's have a look at the round number levels. Do we have a round number level somewhere around here? No, not really. We're inside this 3,800 range. So between 3.7 and 3.9. Okay, then London opened up right here at 3 a.m. New York local time on the SP 500, and we basically stayed up high, relatively speaking, compared to our Asian overnight range, where we hit the 0.5 target right here. So we're gonna drag this line out further, and we had a perfect hit of our 0.5 standard deviation right here with this candle. We continued going above this high. So basically what they started to do at the beginning of the London opening range, basically here from 3 a.m. until 4 a.m. New York local time, is that they trapped traders up high. So we went above this high, forming our DR IDR high right here, and then we quickly reversed within that same hour, basically until 4 a.m. down below. So now for the London range or the overnight range, we would be looking at a bearish bias right here with a close below the DR IDR slow. So we are going to make a circle here as well, but this time we're going to color it in red. So let's choose the red color right here. This candle would have confirmed our bias already. So let's see. Now we're going to do the same thing again. We're going to measure our range right here for our impulse move to the downside. Let's go right over till here. Our 0.5 standard deviation would now be below our Asian range low. Let's see. So overall, we could say we are in a bigger consolidation from yesterday. So we will see what the New York range is going to do, starting from 9:30, which is going to happen within the next 15 minutes. We still have some old fair value gaps up high that are likely to be filled. Basically, this whole range from here, 3890, all the way up to 3890. We had a up high, trapping volume up high. So let's just wait and see. So as of right now, we see that we have a bearish bias for our London kill zone. We pulled back above our 50% level, which would also be the optimum trade entry of our impulse move to the downside. So we will see. We continued working our way up higher. Let's actually grab the volume profile again and see how the volume has been spread out during this move to the downside. Let's go from here to here and from here to here. And we see a volume point of control is going to be, hang on. No, not the fib retracement. I don't want to see the fib retracement. Yes, exactly. That's what I want to see. The volume point of control. We want to see the point of control is right up here. So the volume point of control is most of the time very likely to be retested. So we saw we got a pullback all the way back into our volume point of control. So basically the point where most of the orders have been transacted here on SP 500, which was right up here. We continued filling in this volume point of control, even though we had our last fair value gap right here. So realistically speaking, your first entry very likely would have been, let me grab my short position tool right here on the optimum trade entry, because the optimum trade entry is also lining up with a beautiful bearish fair value gap right here up high within the discounted area or the premium area if we're looking for a short position. So ideally, if I would have traded the setup, I would have placed my entry right here on the optimum trade entry with basically with the bias that we are in a premium according to this range with our down close. So we already have a bearish bias. We have a fair value gap up high in a premium array. We have the volume point of control up higher, but we have a high probability, a roughly 88% probability that this high is not going to be taken out. So what I would have done, this is a 21 tick stop loss. I usually go for 25 ticks because sometimes you get those scammy fake out wicks. 25 ticks, looking forward to take profit at least this level, which would already bring us to a 2 risk to reward, which in my opinion is really, really great. 2 risk to reward. I would take that setup. And so far it looks like it's going to work out. We pulled back up higher through this fair value gap right here. Basically retested the 50% level. We did not close below it. Continued our way back up high into our volume point of control all the way up here. We can also check the 1 minute time frame to see what it looks like here. Yeah, we see most of those transactions have been put into the market right there. We formed some sort of a double bottom down here. Let's go to 5 and let's check the 15 minute as well. Basically forming a beautiful double top pattern or a M pattern with our move up, and down again. We will see if this is going to play out, because as of right now, the Asian range and our London range, our overnight range, both happened inside our previous IDR range right here. So both of those ranges are still inside of yesterday's range, basically, just to point it out a little bit. So as of right now, we're still trading inside. We have higher time frame fair value gaps that are likely to be mitigated first. But since our London kill zone or our overnight range bias is bearish as of right now, we will see what price is going to do. Therefore, I'd say we quickly, before we continue, we check the higher time frame, the daily time frame. Let's close the tick grid, and we can see that let's do a quick analysis. So we have a volume inefficiency happening right here. Let me quickly, if you hold command and you select for let's say you do your charting like I do on a lower time frame, and then you go back up to a higher time frame, what you can do is you can hold down command if you're on a Mac or control if you're on a Windows computer, and then you're selecting all those drawings here on a that you made on a lower time frame. You go to settings, you go over to visibility, and then you turn off the drawings on a daily time frame, an hourly time frame, a weekly time frame, monthly time frame. So you are going to only see those drawings on a hourly, minute, and seconds time frame. All right, so what we see right here now is a volume inefficiency that has been retested. We did, let's say we wicked into it almost, but as of right now, we're just going sideways. And for me, it looks like we are either going to fill the fair value gap right in here. Let's make this a bearish fair value gap for a continuation move further to the downside. So we're either gonna fill, let me get rid of this alert here, remove, yes. So we are maybe likely to fill this fair value gap on our continuation move further to the downside. This looks almost like a bearish flag or a bearish triangle happening right here that we could be looking at, that is likely to maybe fake out traders, fill in this fair value gap, and continue further to the downside to take out liquidity down below. All right, so our major last sell side liquidity that was happening before Christmas right here has been taken out. Our equal lows right here that also filled in this bullish fair value gap right here. So we also have to keep this in mind when we're looking at a daily time frame. Bullish fair value gap, that's our most recent bearish fair value gap. We took out buy side liquidity here. Let me quickly write it in here, buy side liquidity. We put that in the center. We also filled in this fair value gap and grabbed liquidity above our high from the 13th of September, which was also a FOMC news event. So let me quickly write that in here, FOMC news. And this was also a FOMC news event. Most likely on a 13th every month, if that's an actual date. So we took out buy side liquidity here, and we took out some of those orders that were still left in the market right here. So we could say that the buy side liquidity has been effectively taken out of the market, after which we quickly reversed to take out the sell side liquidity down low here. Sell side liquidity in brackets equal lows on a daily time frame. Took out that sell side liquidity. So as of right now, we are just going sideways, and we will see. So as of right now, the day is looking like this, forming a beautiful doji on a daily time frame. So I'd say ideal trading conditions are something else, in my opinion at least. But we will see what the New York kill zone is going to deliver today. So that's our higher time frame analysis. We could consider this as an order block, our most recent down close candle in this move to the upside. This one down here as well, if we go for transitioning order blocks. But let's go back to our 500 time frame and see what we are looking at least today. So right now that's our London range. Okay, why do we have, okay, that makes sense because I drew this range. Okay, we will see if our target of our 0.5 standard deviation is going to be hit, which would bring us to a 3.34 risk to reward ratio, entering based on this fair value gap with a confirmed volume inefficiency right here. If we check the volume profile, lining up with a fair value gap as well right here on M5. So we will see if this trade is actually going to play out, or if we're just going to stay inside yesterday's RDR range, or if we're maybe filling in some of those fair value gaps all the way up here. We already filled in our, our weekly opening gap. What we can look at right now is our previous week's high and low. That's usually what I like to do. So for that, we quickly go on a weekly chart, not on a daily. Hang on. Weekly chart makes it a lot simpler and faster. Our previous week's high and low, so the week prior to Christmas, sitting right here and right here. We also don't want to see this thing on a weekly time frame. So what I'm going to do is I'm going to visibility, I'm disabling weeks, and it's not here anymore. Beautiful. So what we are going to do now is we're dragging this a bit further in. This is our previous week's high and low. Let's style this with a straight line and color it in, let's do a pink. Let's go back to our 5-minute time frame. So this is our previous week's range, and as of right now we see that we are still inside our previous week's high, which happened right here, and our previous week's low. We had the volume inefficiency from a daily time frame that's sitting right in here, from which we have been rejected right here on December the 21st, before we had this major news impact that took out sell side liquidity. Hang on, let me draw this in as well. That's sell side liquidity, and we're going to make it in a gray color as well, dotted line. Beautiful, that's sell side liquidity. And there's also something very nice that happened here is we reacted from a 3,805 level, so 3,805 price. That is effectively 5 points above, or $5, whatever, a 000 level, 3,800 level. So basically what they did here is they didn't move it below 3,800, they moved it just towards 3,800, so only 5 points away, moving it back up, testing the volume inefficiency. And we could also draw a trend line. I think I had this on the chart previously, where we had our front side of the move. We held support on this trend line quite a few times, and then trapping volume up high, basically distributing their long positions again, filling in more and more short positions before the major new stump right here below the sell side liquidity, and also below the 3,800 round number level. So let me draw in a horizontal line, go to coordinates, and oh, we almost got it right. 4 ticks, 3,800, and we're going to color this line in, let's go for a bright white. So making this a whole liquidity grab, not just below the sell side liquidity, but also below a round key level of 3,800, a 000 level. Beautiful. And then we got our instant rejection right here below this 000 level, back up high, consolidating right here. This was Thursday and Friday, the New York kill zone, the day before Christmas. We opened up on December the 26th with a weekly opening gap right here that has been filled in rather quickly, again trapping volume up high with a very similar pattern that we saw right here, a distribution going sideways, relatively speaking, up high. So both of those areas would be distributions where market makers basically start to get rid of their long positions, filling in more short positions. That's why we get those major peaks right into here. So the peak formations are to the upside. We had peaks, they started selling again, buyers kept coming back into the market, buying it back up. They sold their long positions again, filling in more and more short positions, distributing it, and then during the overnight range we got a beautiful overnight range setup here, a pullback to the 50% level, breaking our major trend line that basically formed over the period of 2 trading days. And then we had our 9:30 op or our 8:30 news candle right here, 8:30 news right here, which basically would have confirmed this whole bias that the next sell side liquidity target would first of all be this low and followed by the 3,800 key level number right here, where we had this V-shaped recovery after a major drop to the downside, pullback back up, and we can also see that down here. I did this analysis before, that's why I can bring it up so easily. On a 1 minute time frame, you see a beautiful, beautiful, beautiful head and shoulder pattern where we had our left shoulder, our right shoulder, and our head right here. On a 1 minute time frame, it's a little bit more clearer, but I don't want to go down to a 1 minute right now. A beautiful inverted head and shoulders pattern below a key number, a 3,800 000 level, and below sell side liquidity of our low that has been formed. Oh, hang on, let me actually move this further down to the actual low right here on December the 20th, on Tuesday. So this was a beautiful play, both the short, this pump and dump basically, this escalator up, elevator down movement with a beautiful inverted head and shoulder pattern below a 000 level and below sell side liquidity for a continuation move up. Then we open up after Christmas again on the 26th of December with a move to the upside, basically filling in fair value gaps right around here. We could also draw the volume profile from our high all the way down to our low, filling in all this liquidity void basically here on a 5-minute time frame. And yeah, doing a similar sort of distribution that we did here prior to our 22nd or 23rd of December, no, 22nd of December dump right here below our 000 level. Similar to here, we had our distribution and the market dumped back down, not below our 000 level because it's a period after Christmas and we're in between Christmas and New Year's. So usually there's not lots of volume happening, or let's say there's less volume in the market than, for example, if we would be trading a casual March or February whatsoever, even January. So relatively speaking, there's less volume in the market. We gapped up to the upside, trapping traders up high, going sideways for the Asian range and our overnight range right here, starting from 3 a.m. Followed by a breakout of this consolidation sideways right here, just before we hit 8:30 news, and we continue dropping further down and during over New York range, basically here from our IDR range. We saw that we basically stayed inside for that whole period. And as of right now, I see we just open up as well, so I'm gonna be going back to live price action very soon. We see that we are still stuck between our yesterday's 27th of December high and low of our DR range. So let's get rid of those Fibonacci levels so we have it a little bit easier. Bullish confirmation, bearish bias here for the overnight range. And let's see. So if we go now to our London kill zone, we see that we might have actually hit our take profit target of our 0.5 standard deviation. Yeah, we hit it already with this breakout and we just targeted this 1.5 standard deviation. So our trade effectively would have played out based off this fair value gap above this 50% level of our RDR range. What we did initially is we used this whole impulse movement to the downside, basically from this high down to this low, where we had our optimum trade entry perfectly lining up with this fair value gap and volume inefficiency, where we would have entered short with a stop loss with a few ticks above our DR high. And yeah, beautiful. It would have played out very nicely. We did not hit our full profit target of below 0.5, but I would have moved my stop loss to break even as soon as we breach this level right here for a risk-free trade. Of course, we reversed right now after taking out the sell side liquidity, below Asia and London's low right here. So prior to this low right here, this was our current low of the day, here happening from 7:50 p.m. New York local time, which we have effectively taken out. And now we're very likely to take out our buy side liquidity right up here. Then we are going to wait for our RDR range to form. This is our first 5-minute candle, so we have 1 more hour left of analysis basically before we can confirm our bias for the day. And we are pumping up very nicely. So we now broke our current high of the day from our London high at 3:20 a.m. New York local time. So yeah, I'd say within 5 minutes, or a little bit less than 5 minutes, we took out our low of the day and high of the day. So as of right now, nothing's really changed. We're still inside our range. So as soon as we break this level, we actually broke out of our yesterday's IDR range during the New York kill zone from 9:30 until 10:30. So if we break above this level here, right here, 38730, I'd say we're indecisive because we took out sell side liquidity first, even though we did not take out our yesterday's New York kill zone low right here at 10 a.m. So we will wait and see what happens. So we just officially broke above our yesterday's RDR range. And we will see if we get rejected from this level. If this is just a stop hunt, a liquidity hunt for all those traders that actually have positioned themselves short, who did not trade their stop loss to break even, securing profits as soon as we break this low or our current low of the day, which would be sitting right here at the level of 3,850. So overall, this would have been my take profit target for a nice 2.1 risk to reward trade, almost 2.2. It's not too bad at all. I actually like 2 risk to reward trades more because they're more reliable, more likely. We also would have had a beautiful entry right here just prior to the Frankfurt Open at 2 a.m. New York local time. A retest of our IDR range of the from our Asian session from 7:30 until 8:30. Retested a volume inefficiency, fair value gap, optimum trade entry in a discounted area if we measure it from our impulse move that gave us our bullish confirmation. So 4.5 and 2.16 risk to reward would have been locked in for the day. It's more than you ever going to need to become profitable, in my opinion at least. But if you catch one of these, you'd be fine. Alright, so we had a massive rejection up above this of our yesterday's New York range, basically from 9:30 until 10:30. So let's check on a 1 minute time frame to see what's going on here. If this is not just going to be a liquidity grab continuing on its move to the downside. So just for fun, I'm going short with 1 contract right here. I'm going to move my stop loss above this high and our take profit target below this low, and see if this was just a quick stop hunt above our current day's high for a continuation move to the downside. So we're now on a 1 minute time frame. Let's see what's going to happen after effectively taking out the buy side liquidity. And again, guys, if you have any questions right now, feel free to send them in the chat or on YouTube Live. I'm going to be answering them as good as I can. And we will wait and see if our DR/IDR range to form. Also, if you have taken any trades today, maybe also not on SP500, feel free to share them with us and we can go over them while we wait for our DR/IDR to form today. So let's see. We're perhaps very likely to fill in this liquidity void sort of thing right here, this fair value gap here on a 1 minute time frame, which consists, basically inside right here at least we would have hit our first take profit. So if you're going for the IDR range, you would have hit a, okay, let's draw this up quickly. I like to do it manually. I know the new version of the indicator can do this as well, but we effectively hit our negative 1.5 standard deviation of our overnight range right here, taking out this liquidity. So if you would have entered based on this fair value gap, I'd say your first, let's say, moving your stop loss to break even target would have been right here at our 0.5 standard deviation for a 1.28 risk to reward ratio trade. After which you could have maybe closed 50% of your position just because you're playing it safe and news are coming up, or let's say the market open is coming up, is right ahead of us. So makes sense to basically close at least some part of your position to secure your profits, moving your stop loss to break even and letting it run at least below this low and our current daily low, taking partials maybe here 25% and another 25% off here right before our news hit basically. So right here you could have at least secured a 2 risk to reward. And right here over our overnight range, not overnight range, our Asian range from 7:30 p.m. New York local time until 8:30 p.m. we see that we had our bullish confirmation, retest of our DR/IDR gap basically right here, and fair value gap with volume inefficiency. Beautiful setup. This was also below the 50% level of our impulse move to the upside. 50% right here. So we are in a discount, looking forward for a long position with a bullish confirmation, with a beautiful retest of this fair value gap / volume inefficiency for a perfect hit of our 0.5 standard deviation. So let's see. Let me get rid of all those Fibonacci tools here. And let's wait and see what's happening up here. Go back to a 1 minute time frame and let's now just watch and see what's going to happen. And again, if you guys have any questions, feel free to send them into the chat right now. We've got actually quite a few people watching the live stream, which is awesome. Even though it's at December 28th, and most people actually decide not to trade from basically after Christmas until, I don't know, maybe the 4th or 3rd of January. It makes sense. I also only took one, I'd say, very conservative or safe play using my own strategy on GBP USD today during the London kill zone. But for today, I'm not sure. Looks really odd because we stayed between our DR and IDR high and lows for basically our overnight range, our post-session range and our overnight range right here. Now we had a massive movement compared to everything else we saw today, at least time-wise, taking out our current day's low right here from our post-session or post-New York. I'm not sure, I'm just going to call it Asian range from here on, from our Asian range right here. That created the low right here at 3850. Taken out effectively, left behind a huge wick. Now we actually took out our current high of the day right here, which formed during the London range or our overnight range. And we also wicked above our previous day's RDR high for our New York range. So this is going to be the New York range, the Asian range, and the London range. This is how I'm going to do it from now on. Makes it a lot simpler. All right, let's wait and see. Be patient for RDR range to form. All right, we are in streaming since 40 minutes. So now we have 45 minutes to go for our RDR range to form. All right, I'm gonna have a sip of water. Let's wait and see. So far, from our, let's say, paper trading fund trade right up here from our high on a 1 minute time frame, we did not see much volatility. So as of right now, we're just going sideways. We wicked back above our New York range high from yesterday. So we will see if this is just going to be a quick pump and dump scheme, or if this is actually a continuation breakout for an extension of our yesterday's range. All right, so let's go over to pound US dollar and see what that's doing. Can turn on our DR IDR, and let's get rid of all my drawings so far. Get rid of the indicators too. We had a bullish confirmation after our London range. Let's get rid of the Session Pro indicator here quickly. Bullish confirmation right here. As soon as we close above, we pulled back into this fair value gap that was created with this close above our DR high, with a beautiful continuation trade up to our second standard deviation up high, pulling back 4 standard deviation, continuing up higher. So now we almost reached our third full standard deviation of our overnight range right here on pound US dollar. Beautiful accumulation pattern right here, with a pullback during our overnight range back in those fair value gaps that have been created during our overnight range from the Tuesday, December 27th, 7:30 p.m. until 8:30 p.m., where we left behind those fair value gaps right here that have been retested and refilled. Can also quickly draw it up from here to here. Now we see all those messy trades. Pullback, forming our DR IDR low, continuation or basically extension to further to the upside. So now we have to wait and see what's going to happen. For our next New York range, all right, British pound should be done. I only took this trade this morning based on the VWAP retest and just a general bullishness after this retest, a bullish stochastic RSI crossover and a bullish Scarpa Pro right here. But I'd say let's go back to SP 500 and see what's happening right here. So we're still going sideways, not much is happening. Right now it's just patience to wait and see what's happening. We can also check a few other charts. If you want me to analyze a few other charts, just send it into the chat and we will do so while we're still waiting for our DR IDR to form. Because we've got DAX. Yeah, I can do that. Hang on. Let's do a vertical line. So we would have to wait until 10:30. So this is our end of our range. Let's go back to a 5-minute time frame and wait and see. So as soon as we hit this point, we can be certain that our DR high and DR low is going to be confirmed, after which we can create our daily bias. So effectively, we still have 45 minutes to go. All right, let's have a look at the DAX. DAX, this should be the right symbol, or would I have to look for something else? Would I have to look for German 30? Free smooth. What would I have to search for? Because I don't really trade the DAX or look at chart at all. So would it be the German 30, 40, or is it going to be just the DAX if I type it in? German 40, okay. So I guess I'm going to do the Pepperstone CFD then. DE40. Yeah, then let's go for buy ON. I don't see a DE40 from ON. I've got all the brokers. We're going for German 40. There's no INR either. If I go for DAX, German 30, Global Prime. Let's just go with Global Prime. This usually is a nice chart. Alright, let's put up our indicators. Okay, then we do DE40, German 40 by Pepperstone. Alright. Now we go over to our DR IDR version 1 right here. And let's see what Germans were up to. Alright, let it load. This trade is still going on, so we're still inside this range right here up high. We'll see, maybe we fill in this fair value gap, maybe down here, for a continuation move further to the upside. But we will have to wait for our bias to be confirmed. Alright, why is this taking so long? So what we can do, first of all, we could say we are going to mark out important lows and highs. So this is the Tuesday's December's low. We took out liquidity here above this high. And this we took out liquidity from, okay, this is our December, this is our overnight range from 7:30 basically. So from here all the way up till 8:30. So we had a close above, pullback into a fair value gap right here, taking our sell side liquidity off our previous day's low right here. Okay, here we go. Let's turn off the show standard deviation lines. We don't need them right here on the chart. Go back to S&P, and we are finally inside our fair value gap that we were looking forward to target. We just touched it right now, so we will see. This is just a little fun trade. There's not much behind it other than, yeah, let's say a good gut feeling that this is not very likely to continue, and specifically because we just consolidated up high. We will see. I leave my profit target below this low. Just leave it there because it's a paper trade anyway. Alright, so let's have a look. We have our previous day's low that has been formed. Let's quickly go to a daily chart, makes it a bit easier. So on a daily chart, first of all, what we can identify is that we are within a huge daily fair value gap right here. We have another fair value gap waiting for us right here. And no more fair value gaps other than a very minor one right here. Those are the current fair value gaps on a daily time frame here on German 40 or the DAX. So we would be looking at, yeah, we are basically completely inside this fair value gap. Almost perfect price delivery if we would drag it out. Completely inside. We left behind on this way, move to the downside, we left behind a bearish fair value gap right here. Let's quickly color this in red. So this would be our higher time frame analysis. We had buy side liquidity taken out before we had this move further down to the downside. Hang on. Buy side liquidity taken out with this wick to the upside. So because we have to understand the context basically before we start analyzing the 5-minute time frame. So as of right now, we are inside this fair value gap, slowly filling it in, and we've been inside this huge massive fair value gap for the past 1, 2, 3, 4, 5, 6, 7, 8, 9 days. So as of right now, the DAX is just consolidating in my opinion, which is fair enough because most of the time, especially during that period prior to Christmas and after Christmas between New Year's Eve, you don't see much volatility or volume on most assets. Yes, back to midnight open. Beautiful. So this trade is actually playing out pretty well, I have to admit. That's just a gut was just a gut feeling because we took out our yesterday's IDR high, basically our double top pattern right here, and we also took out our current day's high right here. So we will see if we actually get a complete move to the downside, or if this is just going to be a fair value gap fill in of this fair value gap that has been left inside right here. So let's check 5 minute. Do we have anything else lining up with this level? No, other than this fair value gap, not much. I'm just gonna keep this trade open because it's a paper trade, and I'm curious if this is actually being taken out, or if this is just a stop hunt for traders that got into this market long already, now doubting themselves again. Why did it not work out? Let's go back to our DAX. So as of right now, we're inside this daily fair value gap. Let's quickly color both of those lines in green. All right, now we can break it down to a 15-minute time frame. This should be enough. So we see that this whole price action we had over the past few days was completely inside this fair value gap, but just go down to a 5-minute time frame because there's really not much happening on German 40. Of course, you can scalp it, but there's no proper setup for a very nice move further to the downside based on a daily analysis, because right now we're just inside a fair value gap, a pretty big one actually. All right, so now we're here at our DR IDR range form. This is our daily fair value gap that we have drawn in, that we have retested. Pretty similar setup that we had here on the DAX. We could also draw a, no, not really from this point. Okay, just leave it out. We had a very similar opening gap here on the DAX if we compare it to the S&P. That also, well, with a similar distribution, but I mean, there's not really much interest, nothing interesting happening, at least for me. We're just going sideways basically for this whole week. This whole week so far, it's Wednesday today, couldn't fit in this little box right here, and this is a 5-minute time frame. So as of right now, I don't know, I don't see much happening. We can analyze our current RDR and IDR range. So we had our Asian range forming right here up until 8:30 with a close-up high. We filled, like I mentioned earlier, those fair value gaps in right here, which would be bullish fair value gaps. Come on, let me zoom in a little bit better so we can actually see it. So we had fair value gap 1 right here, and fair value gap 2, a very small one with a small volume inefficiency, but this is not a, this is a Pepperstone, a index CFD chart, so volume inefficiencies don't play a important role here because it's not the actual futures contract. So both of them will be bullish order, bullish fair value gaps right here. We can also draw our Fibonacci tool right here, and we see that we would have hit a beautiful optimum trade entry based on our impulse move to the upside. Beautiful optimum trade entry opportunity. I would have placed my stop loss in this case right here at this wick down here for a 46 tick stop loss, or pip, or 4.6 pips, with our first target right up here and our second target right here at our 0.5 standard deviation, which would almost be a 10 to 1 risk reward, which would have been hit. So if you traded the Asian range today on German 40, this could have been a very profitable setup. If you got if you were not awake right here, you also got another entry opportunity very similar to what we saw on the S&P today. Very similar movement. We also left behind this fair value gap right here during our Asian range. We closed up high, so this is bullish bias confirmation. We pulled back, but we did not pull back into our optimum trade entry. If I draw this Fibonacci tool again, right here would have been our optimum trade entry based on ICT concepts, but right above this optimum trade entry we had our fair value gap with a confirmed volume inefficiency. We talked about this a little bit earlier during the stream. we retested the DR IDR high right here for first time and then again for a second time. Very similar to what we saw on the German 40. We left behind fair value gaps. We retested it once, came back up, retested it twice before we had this, let's say, rather fast move to the upside. Very similar to what we saw on the SP 500. So very similar trade setups on both. Here with a higher risk to reward opportunity, depending of where you are placing your stop loss. If you would have went for a very tight stop, it could have been a 17-to-1 risk to reward. If you are rather conservative and you place your stop loss on the DR low because of probabilities, you could be looking at a 4 risk to reward up until our 0.5 standard deviation. All right, then we formed our overnight range. I'm just going to leave it like this. Beautiful optimum trade entry with fair value gap and a volume inefficiency. For our London range, forming from 3 a.m. until 4 a.m. New York local time, we see that we first of all closed below, giving us a bearish bias, which was basically only a liquidity grab below our Asian session low right here at 8:15, 8 a.m., 8 p.m. New York local time from Tuesday. We consolidated down low. If we check, for example, the 1 minute time frame now, we are very likely to see a beautiful pattern down here. Let's see what we got. We had our move down. Now, doesn't really look like a beautiful head and shoulders pattern. Is usually the typical thing that I'm looking for. You could have maybe seen a double top pattern that has been retested below our Asian low that formed right here. This is our Asian low, and we touched it, or we went below it once, and buyers stepped into the market and price quickly went back up again, pulled back in it again. We had a massive, not a massive, but a good rejection of this major level right here. Went back lower, again, bearish, bullish engulfing candlestick, back up high. Another movement to the downside with our lowest point we've seen so far today. And again, bullish engulfing candle, again into this area. So that the support right here would have been very obvious with the confluence of our Asian session low right here, which would be labeled as sell side liquidity. So we formed a double bottom, and we again had a continuation move to the upside, left behind a beautiful fair value gap right here that has been refilled. And we had again a beautiful reaction of our DR IDR slow right here from our Asian range and also from our London opening range. Again, we had then a beautiful change of character forming right here, pulled back into the fair value gap for a continuation move further to the upside, followed by a nice little bull flag pattern right here for another continuation move further to the upside. So I don't know, during the London range, I'd say the SP 500 index was the asset to look at because we did not close above our DR IDR's high, but we did on German 40. So we first had our bearish bias confirmation. If you would have now been looking for a entry opportunity, I'd say if you pick between, I don't know, multiple charts, let's say for example the German 40, the SP 500, and I don't know what else, maybe GBP USD or USD JPY. I think because the correlation between the S&P 500 and German 40 was so big, I'd say that between both of those charts, I would have certainly picked the S&P 500 with this beautiful fair value gap in the premium array of our 50% move here from this massive impulse further to the downside with a bearish bias. We also had confirmed volume and efficiency. Our volume point of control was also up high. So I'd say just looking at the chart, I would have certainly picked the S&P 500 to trade today with a beautiful entry right here inside this fair value gap for a full take profit of also our Asian session low right here, or our London session low, or a I think we got down to a 1.5, negative 1.5 standard deviation after a confirmed bearish bias. So yeah, German 40 did not do much today, at least during the overnight range. The Asian range would have been beautiful to trade, but this is just choppiness in my opinion. So we also had a fair value gap right here that has very likely been filled in right now. To determine a bias right here would be hard. We did not get a close above our DR IDR high. So we would theoretically still have a bearish bias confirmation. We have a bearish fair value gap waiting for us right here. All right, let's color this in red. Done. Now we are waiting for the SP 500 to basically lead, to guide us where it's going to go. So let's go back to a 1 minute time frame. So as of right now, we filled in parts of this bullish fair value gap down here, and we actually left behind a beautiful bearish fair value gap that has been filled in completely now on the S&P. So we will see if this move is going to continue further to the downside. All right, that was German 40. Let's have a look at cable. Forming new higher highs, very beautiful. All right, let's wait and see. Again, if you have any questions, just send them into the chat and I will do my best with answering them. Yes, VK, I can talk about how I'm using those other indicators. This is part of a strategy I've been using for a very long time. This is one of the indicators I created myself. And basically, what I'm doing is I'm trading the London kill zone from 2 a.m. New York local time up until 5 a.m. New York local time. And yeah, it's all part of the strategy. So basically, all I'm doing this morning, I woke up a little bit late. So I think it was around 7:30 a.m. my time. So this was right around 2 a.m. New York local time. And I just saw this beautiful pullback to our VWAP right here, which is actually resetting at New York midnight. So if I actually change it to GMT -5, like it's supposed to be, we actually get the VWAP reset right here at New York local time midnight. Usually the VWAP is resetting right after the market is closing, right before Asia basically. But I modified the VWAP, at least my VWAP a little bit, so it's actually resetting differently. And here we saw a beautiful pullback into the VWAP, into this consolidation prior to the Frankfurt Open, with a bullish stochastic RSI crossover and a bullish confirmation of my own indicator. And this was enough for me to take this straight into the long direction. Also because we had to take out our previous day's range. Everything was inside. There's not much behind it because I don't usually trade between Christmas and New Year's Eve. But this is just part of my strategy where I use the stochastic RSI in combination with my indicator, the Scarpa Pro, and the VWAP. But I can guarantee, did I hear you say that VIPs and gaps only work on future contracts? If so, why is that? That's simply because this is a CFD. So if you, for example, now look for German, I don't know, if you look for DE40, you have 3 different providers right here, and all of them are CFDs there. So basically, you would have to pretty much similar thing as we're doing right here for the S&P 500 futures contract. This futures contract is basically centralized through the Chicago Mercantile Exchange right here, CME. That's what it stands for. And we pay extra for this data, for the real-time tick data. So basically everyone over the whole world if they're watching the S&P 500 CME futures contract, they're looking at the same prices, the same volume inefficiencies and everything else. So if you trade properly and those volume inefficiencies and stuff like that is important for you, you simply by comparing the 1 minute chart here on the CME centralized, basically premium chart where you're actually paying extra to see, comparing it to the German 40 here from Pepperstone, which is a CFD, doesn't look as aesthetic. Now let's go back to a 5-minute chart. Basically, the whole point I'm trying to make is that the volume inefficiencies and stuff like that is going to be different from broker to broker. They won't be at the same prices. They won't be at the, I don't know, same areas or whatsoever. For example, Pepperstone could have this volume inefficiency right here, and 8cap or a different broker doesn't even have a volume inefficiency right here because the CFD market, or in general the Forex market, is decentralized in contrast to the S&P 500 or the CME future contracts basically, which are centralized. That's the difference between the S&P 500 CME futures contract and, for example, just a basic British pound US dollar 8cap chart or a German 40 Pepperstone chart. I hope that made sense to you. You can still use them, but they're very likely not going to be as precise as a CME futures chart. And I think for real-time data here on the S&P 500, you only have to pay like $3 or $3.50 extra, and then you have all the CME and future contracts right here. Where do we have it? S&P 500 or the US indices, the soybeans futures, or CME, Chicago Mercantile Exchange future contracts. All right, let's see. We're still continuing on our move further to the downside. This right here could have been a beautiful continuation short entry, as well as our entry somewhere up here, completely based on gut feeling and, yeah, I don't know, intuition, experience. M15 breaker. All right, let me pull it up. Yeah, you could argue that we're looking at a breaker block, but I don't know. Looks, at least to me, it doesn't look like this is very likely to continue further to the upside, even though we have this massive fair value gap that might want to be filled, but I don't know. I'm going to wait for the buyers before I'm placing another paper trade, or maybe even on my live futures account. I'm not sure about it, but as of right now, I wouldn't be looking for any trades because we are still inside our previous day's IDR range. So right now it's just watching the charts up until 10:30. No, that's not 10:30. 10:30 is here. Up until 10:30, until our New York range is basically formed, and we can actually wait for our bias to be confirmed with a close up high or up low, down low. All right. Also, if you're trading on desktop, if you're not using Google Chrome, but if you're using the actual TradingView application, if you click on those 3 dots right here and you click on settings, make sure your TradingView is up to date because they just released their version 2 of their TradingView desktop application. So if you're trading on desktop, make sure to update. I think there are a few bug fixes. I haven't noticed any major upgrades, to be really honest, but I don't know, it's a nice reminder. So what happens if I click on that? Nothing. Interesting. All right, we can also open up the tick grid now because now it's actually forming, and we can wait for divergences to form. Unless anyone knows what TheMas7er basically is doing with the tick grid, if someone likes to explain it to me. I tried to look it up in one of his live streams, but I couldn't really figure out for what he's actually using the tick grid. I thought that it's... Could you talk about the tick grid? Yeah, so what I thought when I first saw the tick grid is that basically I'd use it for divergences because tick red is the whole sum of all. Hang on, I can actually pull it up. Let's open up the browser. Tick grid for a nice explanation. I didn't study all that stuff, so accept all. Tick grid SP 500. Let's go to this one. Maybe makes sense what they are writing here about it. I think it's also on the master's Discord. But a very simple explanation would be the total sum of upticks and downticks over the whole S&P 500 index. So all of those 500 equities or stocks that are included in this index are basically represented by this tick grid. So yeah, like VK or no, further on already wrote into the chat is that the master is also using this for divergences. We can look for an example that might explain things a little bit better. Let's get rid of this Fibonacci tool. For example, now yesterday was just choppiness. We stayed within our range. Let's go to a normal day. This was the day prior to Christmas. Let's have a look at the 22nd of December. And if we see some divergences right here. So the market opened up. And basically what we saw is that while the market continued making lower lows and lower highs right here on its move to the downside, the tick grid started to form higher highs and higher lows at the same time. So basically what we had here was a massive divergence between the S&P, I'd say the leading index, compared to all the equities that are actually inside the S&P 500. So this divergence would have led to the belief that it's actually just that this drop is basically designed for a sell side liquidity takeout below the 000 level, below our low that we formed right here on the 20th of December, where we walked our way up here slowly, had our distribution right up high, the break of our trend line with our very sharp drop back below our 000 level, below our Tuesday's low into sell side liquidity. And right here we formed a beautiful inverted head and shoulder pattern below our 000 level. So this, especially with the tick red, with all this confluence of the tick red of our 000 level, a key level with our sell side liquidity from Tuesday the 20th of December, very likely that, I don't know, if you would have, for example, seen this pattern in confluence with this tick red, I'd say the bias or the confirmations were there to take this trade long below the 3,800 level or on its way down. When we got back into it, left behind a fair value gap, we just wicked back on this 3,800 key level right here. Let me zoom in. We just wicked onto it again before continuing further to the upside. So this is basically the only thing you use a tick grid for. So like for example, ICT is using SMT divergence between the US dollar index and, for example, the Euro US dollar chart. So let's get rid of everything here. And let's say, for example, we compare the Euro US dollar. So something that's highly correlated. Let's go for FXCM. And we are going to plot the DXY on a new pane. And then what I like to do, because they're invertedly correlated, unlike the S&P with its tick grid. Let's actually go back to our price action so we can monitor this trade and actually see what's going on. So not like the S&P 500 with its tick grid, the dollar index and the Euro US dollar are invertedly correlated. So ideally what you'd like to see is, if the Euro US dollar chart is making a new lower low, you want to see the DXY forming a new higher high. That's why I like to do a right click right here on our price scale, and I like to invert the scale. You just have to make sure that you are aware that you inverted the scale. And now you can actually compare lows with lows and highs with highs. Makes it a lot easier, especially if you've been sitting in front of the chart for a few hours. And then what I like to do here in the style section of the DXY, I'm looking for candles. And now we can, for example, use SMT divergences in a very easy manner. As of right now, I don't think we had any. No, we had one significant SMT divergence right here. We formed our high. On the Euro-US dollar pair, we wicked 1, 2, 3 times above our high that we formed at 2 a.m. New York local time, which is the Frankfurt opening. So right here around, now let's say late London kill zone, we wicked above this high that we formed. But on the dollar index, we did not see this break of our high that has been formed at 2 a.m., forming a bearish SMT divergence where you would have entered short on the Euro-US dollar. You could have waited. There's no specifications when you are going to enter. You can enter based on a 1 minute time frame, or you can enter on a massive bearish momentum candle, like for example this one with no wick to the downside, where you could have entered right here with your stop loss above this high. You could have moved it up a little bit higher for a 10 pip stop loss for a nice round number, also to if you're calculating in spread. And then you could have chosen your best sell side liquidity target. And ideally that would have been, I don't know, this low, or this low right here, one of those 3 lows. Or you could have just, I don't know, let the trade play out and slowly trade your stop loss down. But overall, I'd say after a free risk to reward, you should be happy with all the profits you made, which is actually not below this low right here from Monday. So yeah, that's how you use SMT divergences, and that's pretty much very similar to what TheMas7er is doing here with the tick grid and the S&P 500 futures contract. 12, 21st, backtest and chill around 70 minutes, he shows, yeah. So basically all you're doing is you compare highs with highs and lows with lows, and if you see a divergence between the tick grid and the S&P 500, actually a very neat tool. There is, let's say you have one more confidence why this thing might continue further down or higher up based on your overall bias. I hope this made sense and was a good explanation about the tick grid. I haven't been using it myself prior to learning about it from TheMas7er, so yeah. But I've been using SMT divergences for quite some time. The only important thing if you trade SMP divergences is that you have to pick major highs and major lows. Because let's say, for example, a previous day high, previous day low, session highs, session lows. If you see divergences between those major highs and lows, for example, from the London kill zone or the New York kill zone over to the next New York kill zone or complete days or weeks low, then the SMT divergences have a very, very, very high probability to work. But if you're, for example, comparing lows and highs somewhere in this area, probability basically sinks to something you don't want to trade. And if you start to compare highs and lows right here with highs and lows right here, but if you compare major highs with major lows, for example, session highs and session lows like right here, or daily lows, and for example right here we had our low right here and we had our low here, and we saw a divergence because on the DXY we actually got very close, or we basically wicked right onto our Tuesday's low, the 27th of December, but on the Euro-US dollar chart we did not. We formed a higher low, which would give you the bullish confluence, and then lining up with the DR IDR you'd have more confirmation, or let's say a better gut feeling to actually take this trade. All right, so let's go back to the S&P, check our 1 minute time frame and see how our trade is going. So basically 5 minutes after, so here it's 9:35, so we had this impactful move to the upside basically starting from 9:30 all the way back to 9:35 when our first 5-minute candle closed. Was major movement basically since the market opened up. Ever since we just consolidated inside this range that has been created within the first 5 minutes of the New York market open. We took out our current day's low right here from our Asian range down here with this wick here further down, and we took out our current day's high that has been formed during the London kill zone right here at around 325. Wicked above it. We also wicked above our yesterday's IDR high right here, those two relative equal highs. We wicked above them as well. Because for the duration for the whole day today, we basically consolidated between our DR low and DR high of our previous New York session from yesterday, the 27th of December. And now we, for the first time since our yesterday New York range, we took out liquidity above those levels. This is the reason why I entered this short trade right here. And we will see if we are going to hit our sell side liquidity target down here to form and we're getting there. We're really getting there. Actually a very beautiful entry. So yeah, this played out very nicely. So we grabbed the buy side liquidity above those relative equal highs from yesterday's RDR high. And I'd say the next interesting target would be the sell side liquidity below our RDR low. But first of all, we have to take out our current day's low, because this wick down here formed on a daily chart our current low of the day. And we'll see if we are going to break this. Beautiful trade. I wish I would have taken that one live, but it's alright. I already made my profits for today. Alright, so we can also check German 40. German 40 already took out the current day's low right here that formed at 4:25 a.m. New York local time. We're already below here. We can bring up our comparison chart where we can look for divergences between the major US indices. So what we're going to do for that is we are going to separate our chart by 3. Right here we are going to print the ES1. Here we are going to use the NQ1. And here we're going to use the YM1. E-mini Dow Jones, the Nasdaq, and the SP500. So now we can compare lows and highs again. Right here, I actually don't want to see my trades, so I'm going to buy and sell buttons disappear, instant order placement, positions, orders. Perfect. So I don't want to see them right here on this chart. And now we can compare all 3 US indices with each other. Alright, so we see that we took out the London kill zone high that formed at 325, somewhere around that. On the SP 500, we took it out on Nasdaq, right here, and we took it out right here, 325, on the Dow Jones as well. So there is no major divergence right here. But what we can say is that, relatively speaking, the Dow Jones is already wicked below the low of Tuesday, December the 27th, right here. If we zoom out on our charts, let me actually sync them up quickly. Interval, time, and date range. Alright, so the low we formed right here. So yeah, there's actually a huge divergence. So the SP 500 index is currently actually lagging behind, because the E-mini Dow Jones already formed a new lower low, a new low of the day compared to Nasdaq, and the SP 500. Yeah, not. We basically had this low taken out, our current day's low that we formed during the Asian range right here at 7:50 p.m. New York local time. Took out our current day's low. Let's color this in red. Same on the 27th, 27, that's our Asian low. Sell side liquidity, same on Nasdaq, just a little bit more volatile compared to the S&P. And same for the Dow Jones. And I think we just hit take profit on the S&P. We now officially formed a new lower low on the S&P 500 as well. Dow Jones is just collapsing, so a very beautiful entry above buy side liquidity. Let's go back to our chart right here. Beautiful trade that is now officially in the books. And that's another old trade that I've entered a while ago, also on a paper trading account. So this actually played out very nice as well, only with 2 contracts on a S&P 500 E-mini contract. So this actually is quite some movement, I'd say. Let me find that entry. Okay. Very likely not here anymore with us. So now we formed a new lower low. I'm looking forward that this sell side liquidity is being taken out, which would represent yesterday's IDR low. So the only index that is not lining up with the other 2 indexes is the Nasdaq as of right now. We did not break our current low of the day. We did break it right here on the S&P, and we broke it significantly here on the Dow Jones. Only chart that is lagging behind right now would be Nasdaq. Do we have some major news for today? Let's go for the S&P 500. Wall Street eyes higher open as investors digest China reopening. Futures edge higher as investors assess China reopening. Bear market lows at risk. Yeah, not really significant. All right, GBP USD doing its thing. The S&P 500 right now below our 830 low, or 930 low actually. So now we just wait and see what's going to happen. German 40 also already below our previous low of the day. Left behind fair value gaps. For example, this fair value gap that has been filled in again for the continuation move to the downside. But overall, this takeout of our current high of the day here on the S&P 500 was a very nice entry. Overall, I wish I would have taken it on my life, but it's fair enough. It's tomorrow, I think, is our last trading day for the week, December the 30th, and then it's December the 31st. And December the 31st shouldn't be a, no, I think, maybe not for futures. We will see. All right, let me quickly check the Discord chat and the YouTube live stream chat. Okay, here we go. Now I see the YouTube live stream chat for the first time. Let me go through all those questions. You are not switching between stock strategy on GU. Okay, hang on. Good afternoon, good morning. No, I am not switching between stock strategy on GU. This is what I trade during the London kill zone, mainly on, or basically only on GU, GBP, USD, using the Scalper Pro Stochastic RSI strategy. To maybe see when a SMT forms. Yes, I can't find the chat channel on Discord. Where is it? It's on TheMas7er's Discord channel. That's where I'm streaming it live. For the other community members of the accumulation zone, I'm streaming it live here on YouTube. Top right. Yeah, there is a reason at Sambaro LP why I have my my time zone here on at UTC -5, because yeah, basically it's a S&P 500 futures contract, and I don't know, because most of the volume overall over the whole market is usually happening during the New York session, New York kill zone. It's fair to admit that, or you can also find a reason for why I'm using UTC -5 on my charts all the time based on the algo. ICT is doing it, TheMas7er is doing it, and I started doing it also a long time ago because it's easier to look, for example, when I'm traveling, if I'm moving from country to country and I don't know, midnight is changing with depending on every country wherever I am. So if I'm basically I'm trying to centralize it, that I'm only looking at UTC -5 time zones, because then 2 a.m. New York local time, 5 a.m. New York local time, 9:30 a.m. New York local time is the same wherever I am on this world. And it's also easier for our whole trading community that we have to basically compare highs and lows with lows if everyone is looking at the same time zone. Do you trade your own funds or do you use FTMO? Currently, I'm trading with my own funds. I've got my own private account, which is big enough. So my daily target is to make 1% profit per day. And I'm compounding those profits on a daily basis. And if you do the math and you know how powerful daily compounding can be, you can look forward to a 20x or a 25x of your initial account balance by daily compounding 1%. That's what I'm using the stock RSI and Scalper Pro strategy for, to basically compound 1% profit per day. And afterwards, I'm most of the time trading the New York range or the New York kill zone with the DR IDR indicator or strategy, basically. And yeah, but I'm looking forward to start a new FTMO challenge early 2023. Making sense. Just set your trading time to, yep, yeah, exactly. Thank you, Matthias. Very similar to my name. My name's Matthias. It's not actually Matt. It's just easier for most people to pronounce Matt and not Matthias. All right, so we still have this huge divergence between the Nasdaq and S&P 500 and Dow Jones. We did not form a new lower low since 9:30 on Nasdaq, but we already formed this low on S&P 500. We now have to wait and see. We still have 4:30. Hang on. We now officially closed our DR IDR range, if I'm not completely mistaken. Yeah, it's 10:30 now, and we had a close below our IDR range, not our DR as of right now. So we could be looking for a bearish bias, or we might actually already have the bearish bias. It's 10:30 now. We have our sell side liquidity that likes to be taken out here on the S&P. Let's check the tick grid for divergences right here. So we continued forming lower lows. We had a minor divergence between this low and this low, with this low and this low right here on the tick grid. But as of right now, I'd say we're all good to go to continue a little bit further to the downside. We will see. Maybe we fill in one of these fair value gaps here to the upside. Let's go back to our 5-minute time frame. So a DR range is formed now. That was from the overnight range. We formed a new lower low, relatively speaking, right here. We have a 5-minute fair value gap waiting for us right here. Other than that, we don't have any fair value gaps in the market right now. And now we're waiting for, ideally, a close below our DR low for a confirmation that we are looking for maybe an entry somewhere in a premium array for a short trade, or depending on the close that's happening now. All right, German 40. Very similar. Let's see if we get this close below the DR slow. Euro US dollar. This was just to show S&T divergence. Let's actually plot the indicator on our charts. DR IDR, DR IDR, and DR IDR. Beautiful. And let's see if any one of these is closing below our DR slow first, but it looks like we're getting this close maybe within the next 1.5 minutes. All right, So Nasdaq is now getting closer to break this low. So it's sliding back up again with the Dow Jones and the SP500. Come on, let's get this close below. This would be an early indication for our bearish bias. All right, pound US dollar dropping, curling back to our VWAP. Now it would be interesting. Let's go over to, nope, let's get rid of this line. If we can spot some SMT divergence right here. But as of right now, I don't see any significant SMT divergence between those levels. We found higher highs on both charts. We formed a low, our low here, and our current day's low right here. Yeah, I don't see any SMT divergence that would have been useful for today on Euro US dollar. We can also check cable and see if we might have seen a SMT divergence here, but also not really. Let me compare those lows. Nope, nope, nope. Pullback, up high, nope. No SMT divergence on any of the major forex pairs. All right, we're still waiting for confirmation for our bias. Let me check the Discord chat. I don't see a close below IDR low, so no bias confirmation yet for me, either met on ES or suggestions, I should say. Looks like it's happening now. Yeah, me neither. We did not get a close below this level right here. We can set an alert to see if we break below it, so we just get the reminder. But as of right now, you're completely right. We are not looking at anything. There's no bias. If we compare all three indices on neither of any of those three US indices, we see a confirmed bias. Right now, I'd say we're pulling back into our DR IDR range. I just completed just as you're reading the text. That's timing. All right, so just have to make sure the YouTube live stream is all looked after. All right. Still waiting. Still waiting. German 40 did not close well. I mean, yeah, it's a CFD, so it's not really sure if on the future index chart of the German 40 index or the DAX that we also got a open below the DR slow. But yeah, I'd say even to trade the German 40 CFD, I would look over to the SP 500 CME chart because they're so heavily correlated. Simply by comparing our Asian range we found today from 7:30 p.m. New York local time until 8:30 p.m. New York local time, we basically had our bullish confirmation. We left behind a fair value gap right around the IDR high right here, this red line, which was also below the 50% level, so in a discount for a long trade right here. If we're looking at our most recent impulse move to the upside, here you could have drawn a change of character, for example. We pulled back below 50% into discount. We retested the RDR high and IDR high into this fair value gap with a confirmed volume inefficiency drawn by the volume profile, testing it, forming some sort of a double bottom in here for our 0.5 standard deviation to be hit right here with perfect precision for a 4.5 risk reward trade. And we pretty much saw the exact same thing happening on German 40 or the DAX as well. We had our Asian range right here from 7:30 p.m. until 8:30 p.m. We closed above. We formed some sort of a double bottom pattern right around the RDR, the Asian range IDR and DR. Right here, we also wicked into this fair value gap right around our optimum trade entry below 50%. Also targeting our 0.5 standard deviation, which has been hit a little bit later on compared to the S&P, but also has been hit. So very, very similar price action in my opinion. It wouldn't surprise me either if the S&P is going back up high to take out those highs and maybe fill in this whole, those 3 fair value gaps right here, massive area, and maybe retest this whole distribution that formed during Monday. But I'd say today are not ideal trading conditions anyway, so if you're trading with live funds, make sure you know what you're doing and you're doing proper risk management. You're not risking more than 1% on your trade, and then I'd say you should be fine. But looking at the whole day, so far this whole day has spent its price action within our previous day RDR low and RDR high. We just took out those relative equal highs right here that formed during yesterday's New York kill zone right here, wicked above it, continued up high, and then we entered into this small feeler short trade right up here, targeting those lows right here that formed at 930. I'd say we could go back up, but prior to that I want to see the sell side liquidity taken out here on the SP 500. Filled in the fair value gap, or at least worked our way into the fair value gap on Dow Jones. We did not work our way into it on the S&P, neither did we do it on NASDAQ. So we are still between the IDR and the DR low right here for today. I am not trading it, but it will be interesting to watch into the day's close. No volume or momentum. I totally agree. We had this, especially if you check the 1 minute time frame, we had momentum or volume coming into the market as usual right at 9:30, here 9:30 up until 9:35. We had this movement, and ever since then we just went sideways, had some momentum, or some momentum is picking up into the market, filling in this fair value gap here short with a bearish engulfing candlestick confirmation. Yeah, a bread and butter setup for a continuation move down. How far it's going to fall, hard to predict. I chose my take profit target to be right here at our low that we formed at 9:31. Yeah, thank you very much. Beautiful short trade, all based on the buy side liquidity taken out, or our previous day's high, not of our previous day, but our high that formed during the London kill zone prior to the New York kill zone, which basically just extended our consolidation range that we formed over the whole day, especially if we're looking at a daily chart, which is now actually looking rather bearish compared to what we looked before, which when it looked still like a little doji. But we will see. Oops, I did not want to modify this alert. Let's go back to our 5 min. And we want to see our drawings again. All right. We will see what's happening. We already caught a beautiful short trade from up here based on our 1 minute time frame. So now I'd say we have to wait and see if this thing is likely. Do we have divergence here? No, not really. We formed our low, we formed a higher low, and again a higher low, so that's all still lining up with the tick grid. Also this low compared to here, no proper divergence in here. Maybe small divergences, but nothing that really stands out. Like for example, if we go back to, let's go back to our 5 minute time frame and compare the divergence, for example, right here, where we continuously on the tick grid formed higher lows right here on this whole movement to the downside after our RDR range, our New York range, basically formed from 9:30 a.m. until 10:30, formed lower lows, lower lows, lower lows, lower lows, lower lows, higher lows, higher lows, higher lows, higher lows, higher lows, inverted head and shoulder pattern below a major key level, a 000 level, 3,800, basically a no-brainer. The safest entry would have been right here, based on this fair value gap, which would have been bullish. So we color it in green. Pull back into this fair value gap again. Bullish engulfing can of this little pullback we had here, and a continuation move to the upside to our 50% level of our IDR range. And afterwards we just consolidated again, stayed within the range, consolidated day before Christmas. Not really interesting, not much volume happening. Opening gap on Monday, continued working up into those highs, into those fair value gap areas right here. Starting the distribution again, pretty similar to what we had up high right here, with a continuation drop further to the downside into yesterday's IDR range, and then we had today's Asian range and London range, which basically completely stayed within yesterday's New York opening range from 9:30 until 10:30. So right now we took out the high of our previous day's New York range, but we have not taken out the slow, which I would consider as the next most likely sell side liquidity target. So if you also got into a trade somewhere up here, up high, this would be the next sell side liquidity target. And right now it looks like we're consolidating sideways right here. And most of the time, if you see price consolidating above major sell side liquidity or below major buy side liquidity, most of the time it's just waiting and consolidating, reaccumulating for an extended move further to the upside or downside, depending if you're looking at buy side or sell side liquidity. Do the two overnight ESDR ranges being contained within the New York DR range currently mean anything to you for context or setups? Now I'd say overall today was just a inside day, so not really volatile. I mean, you don't expect much between Christmas and New Year's Eve anyway, but we still got some beautiful setups. I know, even though the Asian range formed within our, let's say, relatively wide previous day New York range right here, still, if you see the setup, for example, this was a picture perfect setup with our close above our Asian range, pull back into our fair value gap here. If we go back to the 5-minute time frame, I would still take the trade no matter if we're inside this range. It would be still worth that 1% risk that I'm taking, even though we're inside here, because yeah, didn't really bother me. If I would have seen this position, because during the London kill zone I'm only looking at GBP USD, but if I would have looked at it, I would have seen this picture perfect setup form, I would have very likely taken it, no matter if we were inside this range or not. Same for the setup during the overnight range. All right, it looks like we are about to close below our low, targeting this major sell side liquidity. Yesterday's low, basically. Let's have a look at German 40, doing pretty much the same thing. Compare all our three indices. We see that Nasdaq is about to break the 930 low, and S&P is currently leading the race between the major US indices. S&P is continuing going lower, while the Nasdaq and the Dow Jones are still about to break its low right here. So if we are holding below this level right now here for the next 2 minutes, we actually have a bearish bias confirmed. And then we could be looking at fair value gaps to enter from, such as this one right here, for a possible short entry, but we will have to wait for the confirmation. So now we can already draw our IDR range with the standard deviations. So this would be a premium area to short it down from, so above the 50% level. We can also draw our volume profile from our DR high. Let's do it from here up until here. Volume point of control was right around this area where we were inside this bullish fair value gap. So very likely that we retest this area, but getting back above this area could be harder than just continuing further to the downside. But we will see. Our negative 0.5 standard deviation would be just below our sell side liquidity target from our yesterday's low, the 27th of December. So yeah, if we get a pullback inside of this fair value gap or maybe something else based on a 1 minute time frame, let's refine this fair value gap down to this fair value gap. We have another one right around the 50% level, very small one, but let's just draw this one bigger fair value gap. Makes it a little bit more easier. All right, we had this fair value gap that we filled in based on our short position earlier. Continuation, let's go to our 5-minute chart because we are 10 seconds away from our bias to be confirmed with our close below. No, this is not right. It is a hint if close below the IDR. Yeah, I agree. Alright, so we officially closed below the DR low of the New York range, of our New York opening range from 9:30 until 10:30. So now we officially have a confirmed bias short. Let's also use this little thing, triangle that the master is always using. Confirmed bias short. Now let's wait and see. We have our next hourly candle opening up within the next 5 minutes. So we get a new hourly candle close and open, which most of the time brings new momentum and volume into the market. So we will see what's going to happen here. But I'd say we are very likely to continue to take out our sell side liquidity since we already took out buy side. If we're going to continue further down for the rest of the day is still questionable. I don't really think so, but yeah, today is, or in general, yeah, today is not much volume momentum happening. So let's just wait and see. We're about to take out the sell side liquidity. Let's compare all three indices. Finally, Nasdaq took out the low that has been formed at 9:30 a.m. New York local time. Also for the E-mini Dow Jones, we now formed a new lower low. Same for the SP 500. So now everything's lining up again. No divergences between the major US indices, which is nice. Now we're just waiting for our sell side liquidity and our negative 0.5 standard deviation to be hit. Looking at the tick rate, we can now actually see a small divergence. We are forming higher lows, while on the S&P 500 we're actually forming lower lows. So this could be an indication for a maybe pullback back into our range for a continuation move to our negative 0.5 standard deviation. All right. Let's go over to German 40 and see what we're looking at here. Consolidation below the DR slow, but we also now have the confirmation with a bearish bias. We have this bearish fair value gap that's also waiting for us right up high here. But I'm not looking forward to trade the DAX. Especially not the CFD version. So I'm just gonna close this chart for now here. Pound US dollar. We could be looking at a SMT divergence here, since on the dollar index we already broke our low that has been formed yesterday, but on the British pound US dollar chart we did not even get close to it as of right now. We also formed this double bottom, so this would also be a sell side liquidity target for the British pound. We can compare it to Euro US dollar, Euro USD, FXCM. On Euro US dollar we already broke the low. We are about to break this low as well. So yeah, we could be looking at SMT divergences for pound US dollar. Or maybe it's just a matter of time until it's broken. All right. Yep. we are going down. We took out the sell side liquidity. We are about to hit our negative 0.5 standard deviation. Again, this entry we had up here was super good. Trading executions. We had this short entry right here. We actually entered a little bit earlier on, based on a gut feeling I had that this is not going to be a continuation move. This is very likely to be a fake out reversal to trap traders long. We officially hit our negative 0.5 standard deviation. So yeah, now let's wait and see what we're gonna get. 1 second. All right, I'm back. My dad walked in on me asking if I want to join him for pizza, but I already had kebab for lunch. No, for dinner, basically. All right, so there's no divergence between the US indices. We see that that NASDAQ also hit the negative 0.5 standard deviation. Dow Jones did not hit the negative 0.5 standard deviation right now. S&P already hit it. Beautiful. We took out the sell side liquidity now, so yeah, we will basically the classical whipsaw pattern we had right here, taking out the highs, taking out the lows. What it's going to do next is, so our bias is bearish, so now we'd be officially looking for a possible entry short. We can check the 1 minute time frame. We already got those fair value gaps lined up right here that we are looking at. But other than those fair value gaps, we could, so we see the divergence between the tick grid and the S&P now even further. On the S&P, we are forming lower lows, basically into the sell side liquidity, but on the tick grid, we're forming higher lows. So now we're officially seeing a divergence right here, which could be a sign that we are maybe going to pull back to fill in some of those fair value gaps up here. If we measure the whole move from our impact high to our low, we see that this fair value gap as of right now is lining up perfectly with our 50% area. So we would be looking to short the S&P from a premium array, basically here above the 50% level. This is the premium, this is the discount. And if we're looking forward to short it, I usually like to get my entry within the premium area, which is lining up perfectly with this fair value gap. But it looks like we are going to continue making lower lows, for right now at least. Yeah, pizza does sound good, but not today. I had so much good food here now over the holidays with family, like basically been visiting a new family member every day. A huge dinner, lunch and breakfast. It's too much food for me. All right, so yep, our indices are still lining up. We're continuing further to the downside. So let's continue drawing our fib. Still forming the divergence between a tick grid and the SP 500. So thank you further on. My birthday was yesterday, but I appreciated you remembering it, or at least reading it somewhere in the chat. All right, we've been streaming live now for 2 hours already. We caught this beautiful short trade up here based on intuition, but now we're waiting for our confirmed bearish bias for a possible short entry. Maybe inside those fair value gaps, which would be above the 50% level, now that we actually see the divergence with the tick grid. Let me pull up the YouTube live stream. If there are some new questions. No, no new questions. All right. Let's continue. What other charts could we be looking at while we're waiting for a potential entry opportunity here? I mean, pretty much all those charts look the same as of right now. We have a bearish bias, so we would be looking for short entries. We can pull up gold charts. So USD, let's go for ON, get rid of the DXY. And pull up the DR IDR. So as of right now, we also closed below our DR low right here from the New York opening range. We already hit the negative 0.5 standard deviation. So the probability is high that this is going to be the high of the session. The high of the session also lined up beautifully with a bearish fair value gap right here from our overnight range from 3 a.m. New York local time until 4 a.m. New York local time right here. We formed our low of the day right here that has been broken already, so sell side liquidity has been taken out. So now same thing, we will wait and see what's going to happen. We had our bearish bias confirmation right here on this candle at 10:45, but ever since we got a small retest, a small pullback, making this to a pin bar looking candle. We can look on a 1 minute time frame. We had our confirmation at 5-minute time frame at 10:40. We had our 10:45, we had the confirmation. So right here we pulled back inside of the range. So if you like risk, this would have been a entry opportunity short, especially after this pullback, this up close candle, doji, bearish engulfing candle. If you like to scalp the markets, that would have been your scalping opportunity for almost a 2 risk to reward ratio. You can continue trailing your stop loss with you to hit maybe a higher risk to reward, but theoretically every trader should be happy to hit a 1.86 risk to reward ratio. That's 1.8% profit by risking 1%. That's more than enough if you do it on a daily basis. All right, so gold close below. Did we leave some higher time frame fair value gaps behind? Not really. We filled most of them in already. We have one up here that we could be looking forward to fill right in here for a possible short, for a continuation move further to the downside. Oi. Gold is pretty volatile. Okay, compare the indices. Nasdaq again is lagging behind, with Dow Jones and S&P already forming new lower lows, walking towards a full standard deviation. All right, let's see if we can actually break this low, because we are still forming this divergence. The tick grid is continuing to make higher lows right here, so we will see. Yes, I'm going to send you the link on YouTube. No problem at all. Come on, V. Here's the link for YouTube. All right, we broke this low. So we're still not done with our downside expansion. Yep, all indices lining up. US 30 now hit the negative 0.5 standard deviation. Same as Nasdaq, same as SP 500, so that's all lining up. Same for gold. Gold is also continuing lower, maybe heading towards our negative 0.5 standard deviation from yesterday's range, which could be the next overall target. All right. And we're dropping. Yep. Yeah, I'm not really looking forward to take any entries on this move to the downside unless you see a nice fair value gap that has been filled in, but even then the probability for such a small scalp inside of here is not really high. So we're only going to take best trade setups, the ones you can retire with. So yeah, it's not necessary to jump the gun and hop into a trade right here. We had some sort of a chart pattern. If you trade chart patterns, this could have been it. Beautiful bearish pennant, bearish triangle, symmetrical triangle, however you want to call it. Inside we broke it, we closed below the DR, we got a small retest, pin bar, bearish engulfing, continuation, move further to the downside. If you are a chart pattern trader. Alright, pound US dollar is continuing further down. Stochastic RSI down here. No, I don't want to switch around too much because this is something completely different compared to what we're doing, compared to the purpose of this live stream. Alright, so gold, we did a quick analysis on gold. I want to check oil. I want to check out what oil's been doing. Oil's been up to. WTI, no, US oil. Let's just go for this chart. Far out. No, we don't want to see the standard deviation lines at all right now. So what can we say about oil? So we had our Asian range, our overnight range happening right here. Very narrow range if we compare to London and New York. So we only had a range of 25 compared to London with 80, compared to New York with almost 200. But we got our bias for the day basically confirmed during our overnight range, which basically retested our previous New York range right here from our previous day. Did we fill any major fair value gaps here on a M5? Not really, to be honest. So, but we retested the DR IDR low right here. We could draw this area as an area of importance right over into the next day if you want to. And yeah, so we pulled back right inside here and we started to form our Asian range basically. We closed below, so we had a bearish bias right here with this close. Now with this close already, bearish bias. We pulled back, retesting our IDR high, continuing lower, consolidating. So getting your entry, let's say you would have measured the impulse move to the downside right here. You would have placed your entry at the optimum trade entry level. Your stop loss could have been the DR's high. So let's go for a 12 stop loss right here. Looking forward to target the next area for sell side liquidity, which would be all the way down here. And this already would have been a 5 risk to reward trade. Very beautiful. You could have continued trailing it down, not based on your impulse move, which actually confirmed your bearish bias, but just by using the IDR low and IDR high right here. Yeah, which was basically perfectly lined up with a 4 free standard deviation move to the downside. So free standard deviation would mean a 25, no, depending on how you draw your fibs. So ideally I would have drawn my fibs like this because the gap between the IDR high and the DR high is too big. For 2 standard deviations, 4 free standard deviations, continuing even further down. So this was a very great trade setup for all the Asian session traders. I unfortunately can't trade the Asian range unless I'm going to stay up for the whole day or for the whole night basically. Here we had our overnight range forming with a confirmation bullish right here. We pulled back. We could also draw our Fibonacci retracement tool. We almost pulled back to the optimum trade entry, but we pulled back into a discounted area to take a long position. which would have also been a valid entry. Maybe on a lower time frame you would have spotted a fair value gap or maybe a volume inefficiency that led you to the belief that somewhere around this level would have been a great entry. I don't know, here or maybe at the 50% level. Your stop loss would have maybe been here, our IDR low, with your first take profit target at least somewhere around this area. Or if we use the DR IDR low, the 0.5 standard deviation, which would be right here for a 1.77 risk reward. If you would have chosen the optimum trade entry here, from which we basically held support on, a 4 risk to reward ratio. 1 second. All right, pardon the interruption. So let's go back. We're on oil. As of right now, we're still consolidating. I'm not sure if we already got a confirmation close further to the downside. If so, we would have plenty of fair value gaps to basically enter on short into this trade. So this could be a nice pair to watch. Let's go back to S&P. Still continuing further down. Let's compare all three indices. All three indices are actually lining up right now. Almost. Yep, now they're lining up again. What's the time? It's 5:15, so the first 15-minute close is officially over after our new hourly candle open, which also often brings new volume into the market. But I do not see a proper entry opportunity here. I mean, of course, you could find those very, very tiny little fair value gaps. Maybe ICT is able to enter on those small fair value gaps, but I am not looking forward to enter on just based on those small mini fair value gaps. It's not the 2022 mentorship ICT. It's not really based on the whole strategy that the master is teaching us. So it's just not the day for it. From where I can get the DXY TVS on trading view, please. DXY TVS. What do you mean with TVS? DXY TVS on trading view. DXY. I don't know, from right here where you usually grab your symbols or your charts from. I'm not sure if that really answered your question. All right, let's pop up the YouTube chat. It's 5:17. All right. So where is your main chat? The main chat is on the master's Discord, but I'm also looking at the YouTube live stream chat the whole time. So if you have a question, you can either write it on YouTube or on the master's Discord, because that's the strategy we're basically using during this whole live stream, the DR IDR slow. So it would be on the master's Discord server. I can send the link into here. Hang on. Invite people. Copy link. Okay. This would be for the YouTube watchers. This would be the link to the master's Discord, from which we are mainly streaming live here. All right, let's go back to NASDAQ and all the indices. We saw that we found a new lower low on all indices, so there's no divergence as of right now. We're starting to curl back up. We're still forming higher lows, so divergence between the tick grid and the SP 500 is still existent. So we will have to wait and see if we get a nice pullback opportunity. Let's check the 500 time frame. Let's see what it's looking like. Yeah, today's a nice day to study and just watch price action happening live. Maybe use the paper trading function here on TradingView. So, oh, nice. That's an old trade. I think I entered into this trade 1 or 2 weeks ago based on a daily or weekly time frame, and it actually played out very nice. I also had it on my private account, but unfortunately I did not keep it open for this amount of time. But yeah, very nice, very nice. Okay, 1 minute time frame. We're gonna keep watching this time frame. Let's get rid of this. Watch oil. Oil seems likely to pull back now. We will see. Accumulation down low, reaccumulation below lows. Major sell side liquidity would be right here around 77. Beautiful double top. Alright, NQ1 all forming lower low, pulling back up. We now have more fair value gaps that are left behind, such as this one on a 5-minute time frame, this one right here, and bigger one right up here. Everything else has already been fully priced in. Let's go with our fib retracement tool. Here would be from this impulse movement to the downside, our 50% or our premium area would be right around this level. Our volume point of control is very likely to also be right around our optimum trade entry. So if you're looking to go short from a fair value gap in a premium array, this would be the fair value gap for you to go from. This would be considered a fair value gap that is also in this count, so not offering you a optimum risk to reward ratio, depending of where you place your stop loss, because I find it rather hard to find a nice position for your stop loss while you're entering on a fair value gap that's in this count. But that's where opinions go different ways, so that's just how I'm entering. Are you looking to enter the next fair value gap? I'm not going to live trade today at all. I don't like the volume momentum for today's New York session. We had a nice short trade from up here, right on this candle. We entered short right on as soon as this 1 minute candle closed, and we closed our position right here as soon as we took out our 930 low. We had this short going on here on the live stream, but currently, no, I'm not looking to go short based on any of those discount fair value gaps. In my opinion, we had better trading setups during the overnight range and especially during the Asian range here today. This was ideal. This is a textbook setup. I mean, you could print this chart out and frame it and hang it into your room or into your office, because we beautifully retested. I already did the analysis right here. Let me go back. Go to a 5-minute time frame, makes it a bit easier. Beautiful. We had our Asian range forming. We closed above, confirming our bullish bias. We continued up higher. Then what I usually do is I'm drawing a Fibonacci retracement tool of this impulse swing from the lowest point to the highest point, drawing it out. Now I see my premium and discount array, my PD arrays. My discounted area for a long position would be below the 50% level, which is right here. So our DR high and IDR high, the gap in between right here, this range right here, would also be considered being in a discount for a long position. And we also had a beautiful fair value gap right here with confirmed volume inefficiency by drawing the volume profile from this move to the upside. Volume inefficiency, we pulled back in it once, so your order would have been very likely filled already right here on this wick with your stop loss at the 50% level of this range, or maybe a little bit further down on this wick, or if you like to play it safe on the IDR low, or if you really want to play it safe right here. It's only 16 ticks, so it's still fair enough. with your overall take profit target of a negative 0.5 standard deviation for a free risk to reward with perfect price delivery to the tick. So yeah, that was a perfect trade setup in my opinion. During the overnight range, we also had our bearish bias confirmed, pulled back into this fair value gap with our stop loss again above our DR high with the 88% probability. It would have worked out if your take profit target wasn't too far away from everything. So usually what I like to do as soon as we break structure, I move my stop loss to break even, which we did here right at the 9:30 opening. We first wicked down here into sell side liquidity below our current day's low right here that formed at 750 with the new daily opening. And yeah, took out sell side liquidity, impulsive move to the upside, taking out buy side liquidity. That's when I entered short into the market. Looking forward to take profit as soon as we reach sell side liquidity again. All right, let's go back to a 1 minute, 5 minute time. We're already on the 5 minute time frame. So now we actually see some sort of a bigger divergence on the tick grid. We had this massive move to the upside forming, going even above this high. We did not do it right here on the SP 500, so there's more divergence happening right now on the S&P compared to the tick grid. But let's break it down to a 1 minute again and see if we might find a potential short. But other than a paper trade, I'm not gonna do much today based on orders price action. US oil is pulling back inside of the range. All the other US indices, hang on. The other US indices are pretty much doing the same. Let's just line up all those fair value gaps right here so we have them on the chart on all indices. All right. Done. We filled in the fair value gap partly here on the Dow Jones. And we have a fair value gap left behind right here, a very small one. One right here. And nothing else. Yep. All right. We do not have any divergence, SMT divergence between any of the US indices, so we're still waiting for some SMT divergence to form to give us little bits of indication, but so far we don't have any divergence other than the tick grid divergence between the S&P 500 and all its underlying equities. All right. No. Let's see. So if we really analyze this low right here, we could be looking at some sort of change of character right here. So let me change of character bullish. So we're gonna put it on the top. We found a new lower low, making this our new short-term high. We broke this high. We left behind a bullish fair value gap, which could be a potential entry long into this market. So we're gonna color this in green for a optional reverse opportunity. So let's go in with one contract right here at market, and we're going to fill one more contract if we wick further down than this level by 1 ES limit. Let's modify it a little bit. Now let's leave it right on this close for our stop loss below this level right here. We also have a small volume inefficiency, a 1 minute volume inefficiency for a potential reversal opportunity. All right, if we draw a Fibonacci retracement tool from our low to our high, we saw that we wicked below the 50% level into a discount area for a long position. So right here would be our entry, our low, and our take profit target, I'd say, would be based on a higher time frame fair value gap. Let's first of all go for a 2 risk reward. Let's wait and see how this is going to play out. This is just a 1 minute time frame reversal opportunity, if you like to call it this way, based on the tick index divergence we currently see, based on the fair value gap and change of characters. This doesn't have to, it looks like we have buy models matching up with IDR low, midpoint, and high M1. Buy models matching up with IDR low, midpoint, and high. 5 minute time frame. Get rid of the Fibonacci tool, that's too much right now. What exactly do you mean with buy models matching up with IDR low, midpoint, and high M1? M1, okay. Let me check the YouTube chat if there are any new questions. Nope, not on YouTube. We have 1 minute consolidations matching those levels. Yeah, exactly. We have a fair value gap or multiple fair value gaps on a higher time frame right around those levels. Inside here, yeah, we have this consolidation. Actually a nice, beautiful chart pattern. Not sure, I could imagine that most traders that use the master strategy are not really interested in looking at chart patterns, but sometimes they do work, especially if you know where to look for them. Like for example, at this low, when we see sell side liquidity is waiting here for us below our previous day's low, most of the time those chart patterns working into buy side and sell side liquidity, or if buy and sell side liquidity has already been taken out, looking for a reversal pattern like a double bottom, double top, or a head and shoulder, if it's inverted or not, most of the time works out. I can show you one good example for it to work out. If we go to a, no, let's stay on a 1 minute time frame. Where do we have it? No, let's go to a 5 minute. I'm not sure if yep, here do we have it. We had this drop here to the price level of 3805. This is 5 points above the 000 level, which is a major liquidity and just a key level. 000 levels, mark them up on your chart. They're always important to look at. Also, yeah, no, I'm not going to talk about it now. We have sell side liquidity here. Over the period of 2 days, we slowly continued moving prices higher alongside this trend line that started from Tuesday, Wednesday. Then we started to distribute right up here. Distribution phase started to kick in and we broke the trend line, continued, and we got our 830 lows targeting the sell side liquidity here and the major round number level that we now officially broke. Basically what they decided to do here is to generate more liquidity for them to take out at a later point, because traders start to move their stop losses up higher, up higher, up higher. This is beautiful liquidity being built up alongside this trend line that is easily taken out with this massive move to the downside, basically a vertical move to the downside. Okay, it looks like our order has been executed. And as soon as we breach the 000 level, now I'm getting to the point, we had a beautiful inverted head and shoulder pattern. We had our left shoulder, our head with a bullish engulfing candle, and our right shoulder again. And then we slowly got out of the area below 3,800, had a massive momentum candle to the upside that left behind a fair value gap. We wicked inside this fair value gap, retesting our 3,800 round level, continuing to move to the upside to the 50% of our DR. This would have also been a very nice reversal setup. But let's go back to where we are at right now and see if our change of character move is playing out. So we're still inside this fair value gap, got filled in with a new position. You will see. All right. Try the full. Bup, 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 bup. All right, I have to go to walk with my dog very soon, but as of right now, I still have some time left. All right. Crash through this volume and efficiency. We will see if this low is able to hold. If not, this was not a reversal, or at least it did not play out. All the rules matched up basically. We had tick grid divergence. We had a change of character right here. We left behind a fair value gap with a beautiful reaction out of this fair value gap, but we couldn't continue making up or making higher highs and higher lows, which are essential for a reversal. Let's look at all the indices. All right, Nasdaq already formed a new lower low. The S&P is behind. Same for US 30. So we will see. Maybe now we start to get our S&P divergence between the indices. US oil is pulling back up like expected into our DR high and low. In our DR range. Looking for fair value gaps to take it to hopefully take it short from. All right, one fair value gap here. Basically, this whole area is a fair value gap, to be really honest, here on a 5-minute. I'm sure you find more on a 1-minute time frame. Right here for a potential pullback. Now, if we draw our Fibonacci retracement tool from our high to our low, I'd only be considering fair value gaps that are above the 50% level. So they have to be in a premium for me to short them back into the discount area. And vice versa. All right. S&P 500. Oh, we'll see. Maybe this trade is going to work out. We will see. For how long have we been streaming now? That's a good question. We've been streaming now for 2.5 hours. The record was 4 hours, so we will see. I don't think we're going to break the record today because it's not a very interesting day to trade on the S&P. We're still outside our range. Our bias is confirmed bearish, but right now we're waiting for a pullback into a nice fair value gap whatsoever into our DR IDR low right here, into this area where we had this consolidation, where we could be looking for a short continuation entry. But right now it does not look like this pullback is coming. We have our new hourly candle opening up in 30 minutes. And right now it looks like we are sort of going sideways right here at our low. Low of the day currently has to be said as well. So right now, as of the second we're speaking, price action is at its current low of the day. This is the current low of the day for the S&P 500. We will have to wait up until market close if this is going to continue to be our current low of the day. But what I also like to do is I like to drag lines with me to move current days and lows with me, because if I see a reversal opportunity at a current low of the day, I usually like to take it, but it depends on the setup. All right, it's 5:30 p.m. now in my time zone. I have to go to walk with my dog right around 6 p.m. So that would be 20 more minutes. We will see. I am going to take a quick toilet break. I'm going to leave the charts open and we will see what we get. Alright, looks like our trade has been taken out, but we can see even more divergence right now. From this low we formed right here compared to the low on the tick grid, we formed a new lower low, while on the tick grid we found a new higher low, which would theoretically give us more confirmation for this reverse opportunity to the upside, and also an explanation of why we had this impactful continuation move to the upside. So let's just get rid of those executions, not because I'm ashamed of them, but because they're just in the way of the charting work. We have a volume inefficiency waiting for us right here. And looks like this tick grid divergence starts to play out. I'd say probably because too many traders had their stop losses below this level. They just decided to wick it down into this liquidity one more time before maybe now actually playing this reversal. Let's compare on all three indices. On all three indices we actually formed a new lower low, so there is still no divergence between any of the major US indices. On all indices we formed this lower low right here, this most recent lower low. And all three indices on a higher time frame, like the 5-minute time frame, left behind a very, very, very small fair value gap right here. But I would not risk an entry based off this fair value gap. I mean, with a paper trading account, of course, I mean, go for it. We will see. But I don't like this tick grid divergence. And I mean, the paper trading account is there for you to practice and learn, and so why not use it properly? Pretty much like this trade where I took an entry based on a 4-hour time frame with sell side liquidity good chunk away from where we are right now, and yeah, it's working out. Only two contracts. That's right. That's right. All right, we wicked into this volume imbalance now for already the second time. Let's wait and see if we can break above. But right now, market structure wise, we would be looking at bearish market structure, if not for the sake of the tick grid, which is presenting us this bullish divergence here. While the SP 500 index is forming lower lows and lower lows and lower lows, the tick grid is actually forming higher lows and higher lows and higher lows. So it's really interesting to see. Let's wait and see how it's actually playing out. Howie, no worries at all. I also really enjoy this time spending in front of the charts. Also helps me a lot practicing and yeah, answering questions. And we will see what's going to happen. For the next year, I'm planning on streaming live, I think 2 or 3 times. Just using this strategy. We might actually could be looking at a reversal of this fair value gap, but we will see. Yeah. And for any of the new watchers that just joined the stream at the beginning, if you use the TradingView desktop app on Windows or Mac or Linux or whatsoever, if you check your 3 dots right here and you click on settings, make sure you're on the newest TradingView version, because they just released TradingView desktop app version 2.0. They already upgraded to 2.0.2. So yeah, just make sure you're up to date. I think there are a few new improvements they made with their new desktop version if you're not trading out of a Google Chrome or Safari tab. So yeah, just pointing it out. I just read it in an article this morning. All right, nope, we are getting an up close again, very likely. Let's see. Still looking at this divergence even here from this wick to this wick. Lower, low, higher, low. Let's wait and see. This volume inefficiency is right now rejecting us from continuing up higher. All right, let me check the YouTube live stream chat. I entered Nasdaq 100 buy, entered 10 7 10. All right, let's have a look. 10 7 10. 10 7 10. Okay, you very likely entered on a CFD and not on the CME E-mini futures chart. That's why the numbers don't line up with the numbers I have here on my CME. My stop loss will be 1650, TP gonna leave open. 10 7 10. No, 10 7 10 has not been hit. That would be somewhere pretty much down here. That's the thing I don't like about CFDs. But Nasdaq buy, I mean, it should be lining up with what we see here on the SP 500. So we will see what's going to happen. Right now, this resistance by this very small volume and efficiency is holding us back. We will see. We still have this tick grid divergence, which is lining up. We don't have any SMT divergence between any of those three indices. So right now I consider waiting, especially because we just closed inside this 5-minute fair value gap, which could be taking us down one leg further. But we will see what's going to happen actually. All right. Pound US dollar, what are you doing? Still going sideways. US oil. 1 minute chart. Nothing too interesting. Are you using IB for your trades? I am not using IB for my trades. I am currently using AMP futures. Let's go up to the trading panel. Oh, no, not this one. Nope, nope. Yeah, okay, let me quickly log out paper trading. So for futures, I'm currently using AMP futures as I'm sitting in Europe. I think you can trade with IB as well. According to, we should not trade between 12 p.m. and 1 p.m. Do we take that into account at all when trading DR, IDR? That's a good question. I'd say if you see your setup between 12 and 1, I'd still take it. I mean, yeah, of course it's lunch hour in New York, but I don't think that an algo is going out for lunch break. So I don't know, if you see the setup, I take it no matter what, in my opinion. So if it's between 12 or 1, of course you can avoid it because maybe you'd be faked out or something like that, but I'd still take the setup if I see a setup between 12 and 1 p.m. especially. Vahid, this style of trading is smart money concepts and ICT, inner circuit trader concepts, mixed in with the new strategy based on the dealer's range, IDR, DR indicator released by TheMas7er. So basically what we are doing is we are on a 5-minute time frame. We wait for our opening range to form, for example the New York range, which starts at 9:30 up until 10:30 a.m. New York local time. And if we see a close, a 5-minute candle close below our DR low, so below this line basically, which represents the lowest point within the time period between 10:30 a.m. and 9:30 a.m., then we have a 88% probability, around 88%, that this high right here is going to be the high of the session. And yeah, it's working out really well so far. I usually only trade the New York kill zone using the strategy if I'm trading it, but mainly I'm focusing on the overnight range using the typical strategy. You should know what I'm talking about. All right, so we started to form a new lower low on the S&P and on all the other indices as well. So still no divergence. We reacted actually off this bearish fair value gap, but yeah, of course you could have entered on it. No questions asked. very simply by placing your limit order right here on top of this wick, and your stop loss, I'd say, would have been the top of those wicks, so 18 tick stop loss. For the trade to be worth it, you would have at least looked forward to take profit at a 2-to-1 risk reward, which would have been somewhere down here at 3,820. So we will see if this would have actually hit take profit. Of course, on a lower time frame, like right here. Perhaps could have entered right here based on this volume inefficiency with our stop loss. Yeah, above those equal highs right here, 16 ticks. Looking forward to target 32 ticks. I generally don't go below a 2-to-1 risk reward. Alright, forming lower lows. Not interested in pound US dollar right now. Now we start to divert again because we also made a lower low, but relatively speaking, from our lowest point on the tick grid, we are still inside of a bullish divergence between the tick grid and the SP 500. It's actually hard to draw this divergence line now because this low represents this low basically. So from up here we only formed lower lows so far, and relatively speaking, comparing it to the tick grid and to all the underlying assets of the S&P 500 by adding up all upticks and downticks at the same time, we are currently forming a bullish divergence still, basically ever since this point of time. This change of character obviously did not play out. This bullish fair value gap, volume inefficiency also did not stop us from forming a new lower low. Let's see. Again, we found a new lower low with a massive reaction from it. I'd say, yeah, I don't know really. I'd be still waiting for a fair value gap up here to be retested, or maybe a retest of our DR IDR low for a continuation short into the market close. But yeah, like he mentioned, we are between lunch hour and 1 p.m. New York local time. We're right inside lunch, which ICT basically does not trade. So we're between AM and PM session for regular trading hours of the New York stock market. All right. Are there any other questions you'd like me to answer before I very likely enter stream and take my dog for a walk and have some dinner? Because today's price action is really not that interesting. It's still great to study and do a few paper trades here and there, but overall I'd be looking at those two areas right here around this consolidation, around the DR low, DR high, of course based on a 5-minute time frame, perfectly lining up for a potential reverse opportunity for a continuation short, or this fair value gap somewhere around this area refined to a 1-minute fair value gap up here would be the zones I'm gonna set alerts for to eventually look for a reversal opportunity. And that's it, because it doesn't require you to, as soon as the DR IDR range has been formed, you only need a few alerts and you don't have to spend the rest of the day in front of the charts, at least in my opinion, because watching this candle form, there are 100 better things you could do with your time than just waiting for it to slowly walk its way up, because looking for fair value gaps like on a 1-minute time frame or reverse opportunities down here, yeah, I'd say it's not really interesting. Oh, okay, actually this could be interesting. Our low from Friday, our previous week's low, I'd say almost. No, it's not our previous week's low, but I'd say this would be our next sell side liquidity target here on the S&P 500, which would be exactly at, let me grab a price label, 3,821. and a quarter for our next sell side liquidity target. And after that, we would be looking forward to go back below our key number level, which would be the 3,800 level. Almost looking like a head and shoulder pattern in itself, this being its left shoulder, the head, and the right shoulder for a continuation move to the downside. And we are about to take out the sell side. Oh, I did not have the sell side liquidity on my radar up till now, so interesting. Otherwise, I would have not even considered taking a reversal right around this area. Yeah, you live and you learn. Thank you for your time and analysis. No worries. Paper trade, so with paper trading, you simply go on, where did I do that? US oil, trading. If you go on trading panel with TradingView, all you have to do is search for paper trading by TradingView. You click on connect, you connect your account, and then you're connected to a paper trading account. You can basically reset your paper trading account by clicking here. You can modify your commission settings and everything to really simulate your live trading environment. You can export your data and everything, and yeah, basically practice a little bit on a demo account while executing everything on TradingView, which is really handy. I really enjoy trading on TradingView, and it's always good to practice a little bit and to not risk real money, especially on days like these where we are stuck between Christmas and New Year's Eve with momentum, but not the typical New York kill zone or New York session volatility, momentum, and volume. Volume's gonna be picking up around early January, I'd say. And there's also a reason why, for example, ICT completely avoids this whole, basically after Thanksgiving he stopped trading. I think so. Maybe he took a few more trades or something, because he's also, I'd say, in some way addicted to trading. But yeah, there's a reason behind everything. I mean, it's also great to just take a week or even a whole month off from trading and thinking about everything that you've done over this whole trading year, and yeah, going over it and having a little bit of distance away from the charts. And I had it, for example, 1 week ago when I've been skiing to Switzerland, and it's really great because I did not have a break from trading basically during this whole year of 2022, and for the first time being completely away for a whole week, not looking at the charts, was really, yeah, I don't want to say a new experience, but it's almost like a new experience, and it's great having a little bit of distance. And yeah, I enjoyed it, and I actually learned lots from it. Recapping, thinking about what I can do better, what I can improve for the next year, 2023, blah blah blah, all stuff like that, contemplating a little bit. All right, S&P 500, there's still no divergence between maybe a small tick divergence. Let me zoom in here. Yeah, we found a lower low on Nasdaq as well as we did on Dow Jones and the S&P 500. So we're looking still forward to take out the sell side liquidity, which is Friday's low basically. Friday's low right here. And then the next interesting area we'd be looking forward to would be the round number level at 3,800. Yes, thank you for sharing the YouTube channel where we have the live stream going on as well. I live in Switzerland. Where did you go? Thanks for your stream. So I usually say Switzerland. I've been to Ischgl. You should know, like that mountain where you're on top of, and then you basically choose if you want to ski down basically the Switzerland side of the hill or the Austrian side of the hill. I really enjoyed skiing there. It's nice. All right, did we break the sell side liquidity level? Yes, we wicked below it. And immediately buyers got into the market, or some old buy positions or orders have been filled in here. Still doing the same thing, forming higher highs, higher lows, sorry, whilst forming lower lows right here on the S&P. So we still have that divergence going on, very similar to what we saw right here on Thursday, the 22nd of December, where we also, after the IDR has basically been formed this first hour, we continuously made lower lows on the SP 500, but on the tick grid, we actually only made higher lows, higher lows, higher lows, higher lows, until we reached this liquidity level, or this key number level, 3,800. We found this inverted head and shoulder pattern. We, with a momentum shifting candle, we closed above our 3,800 level again. We pulled back into this fair value gap that has been left behind, retesting the 3,800 level for a explosive move back inside of the IDR range. And if we look at what's happening today, it's almost looking the same, in my opinion. It's only depending now where this major sell side liquidity is going to be, from which we are going to react from. We can look for fair value gaps below here, because there's still a few fair value gaps that we could be targeting, such as this one. We have another fair value gap sitting right in here. This fair value gap has already been filled, and we have another one here. So if we extend them on a 5-minute time frame, we'd be looking at, oh, this was a big wick below sell side liquidity. Completely filled in this fair value gap. And now actually, for the first time, starting to form. Yeah, you know why? That's why I always say it's important to mark up hourly closes and new hourly opens with a vertical line on your chart. That's usually what I do if I'm actually trading live and not just paper trade. Always marking up your hourly closes and opens. So at 2 p.m. New York local time, at 1 p.m., at 12 a.m. New York local time, always marking them up, because those are the times when hourly candle traders or 4-hourly candle traders are able to enter into the market, because most of them enter based on candle closes and opens. So that's usually when you're scalping lower time frames, such as the 1 or 5-minute time frame. That's usually when new momentum, volume, volatility enters the market, right here on those hourly opens. That's also usually where they like to trap volume long or short, to basically trap hourly traders into a short position, for example, like here, to basically reverse price on them, forcing them to liquidate their positions or to hit their stop losses. So yeah, 100% very important to mark up your hourly candle closes right here, because most of the time, like for example right now, you tend to forget them. All right, so now we're continue on our way down. Other than small fair value gap entries, such as this one right here, where we had a fair value gap from this wick to this wick. Let's get rid of this one right here, where we basically closed inside this fair value gap. We had a reversal, a continuation short opportunity into this trade, which as of right now would have hit a 3.31 risk reward ratio. I would have taken a trade if I had this sell side liquidity of Friday's low here from 9:50 a.m. New York local time from Friday the 23rd, if I would have had it on my radar. But I did not draw this line out until we already moved somewhere around here, because I was searching for the new sell side liquidity, which is most likely going to be targeted. All right, let's look at the indices. All indices continue to have no divergence between each other. They're all forming lower lows continuously. So nothing's changed. We did not get a pullback to our DR IDR low on any of the indices. If we check oil, also not much movement happening anymore after this move happening here at 9:30 market open. Pound US dollars also has been consolidating for the past hour and a half almost, right around this support. But that's not really interesting to us right now. Yeah, so I'd say we'd be waiting for a sharp reversal opportunity because right now only short traders are in profit, having those stop losses placed all along those lower highs that are likely to be taken out before we continue. Maybe we see a drop below 3,800 today, which actually would be nice, because last time when we dropped below 3,800 we had this massive reversal opportunity here with this inverted head and shoulder pattern, and also a very similar tick grid divergence here. When using volume imbalance, fair value gap, order block, my biggest struggle is not knowing which time frames to use. I end up with a very busy chart since they are everywhere. How to focus on the important ones, please? Good question. I'd say it's always good to keep your higher time. You always would have to start from your daily time frame at least to mark up your important levels of sell side, buy side liquidity, just based on a higher time frame. When you've done that, I usually switch down to a 1 hour time frame to look for first fair value gaps based on a 1 hour time frame. So I look for the fair value gaps there, and then what I like to do is to split them down on a lower time frame, basically refining them, and then I have my higher time frame areas of interest all on the chart, and then I'm looking for example, the typical ICT 2022 mentorship entry model inside of those higher time frames point of interest. Most of the time I'm keeping it very simple by just all I'm doing is I'm drawing out previous day's high, previous day's low, and then I'm looking for point of interests that help me getting into previous day's low, previous day's high, or maybe for a reversal opportunity out of the previous day's low or previous day high liquidity. And yeah, that's mainly how I would deal with it, because I know exactly what you mean. Some traders even go down to a second time frame and refine their fair value gaps from a hourly chart down to a 15-second chart just for this perfect entry execution. And I'd say it's possible to do if you're just analyzing a chart with hindsight, but as a beginner to intermediate trader, to actually being able to perform all this on a 15-second time frame is next to impossible, and it's not easy. That's I think very obvious. So yeah, what order blocks to focus on? I'd say if you're using the DR IDR indicator from TheMas7er, I think it should be pretty good. I mean, you can still draw in all your order blocks, but yeah, I don't really know how to continue answering this question. I hope I answered some of it, but I'd say stick to the 5-minute time frame, definitely, and do like I do, basically mark up your hourly candle closes, because that's really important for new volume entering the market, such as here where we had small body candles until we hit this new hour. But other than that, I'd say mark up your fair value gaps based on a 5-minute time frame and refine them on a 1-minute time frame. And for confluence, and just to have a look what higher time frame traders are looking at, for example on the SP500 today, just look at your hourly time frame and you perhaps very quickly saw that, okay, we have a hourly fair value gap above our DR high and everything right now. So you could put this on a chart and your major sell side liquidity target based on the hourly time frame and stuff like that. And I'd say this way you focus only on the important ones on the lower time frame with higher time frame areas of interest in the back of your head. Like for example, all I would do for price action today. So like for example here, I drew all those 5 or 1 minute fair value gaps into right here, and they're perfectly lining up with this 1 hour fair value gap. What you can do is you can also draw in this 1 hour fair value gap, make it in a different color, but that's too much for me. I don't like having too many things on my chart, so I just leave this out and I take a little note in my head and remembering, okay, we have a hourly fair value gap below prices where we are right now. We took out sell side liquidity of Friday's low. Right here we have a hourly fair value gap that's right above us, and if I check the daily time frame, basically all we've been doing for the past 1, 2, 3, 4, 5, 6 days is going sideways. Of course, on a low time frame, great entry opportunities and stuff like that, but yeah, mostly sideways movements similar to what we saw here. But this does not mean that you can't make profitable scalping trades on a 1 to 5 or 15-minute time frame. But the daily time frame can help you with your overall bias, especially if it's lining up with your bias that's basically presenting itself through the IDR high and low, or this range if you're closing below or above it. I hope that answered your question. ES or SPX, which one would you choose in New York? They are a little different on lower time frame. Both are future charts. Good question. I'd say SPX, as long as SPX is not a futures, not a CFD, and you want to trade future contracts, so I'd say it's really up to you and your broker, whatever you prefer, especially if lower time frame charts are pretty much the same. I just decided to stick with the ES, the CME mini futures contract of the S&P, Nasdaq, and the Dow Jones, basically, because that's how I learned it from ICT. And yeah, those are the available packages if I choose to pay for the real-time market data for the CME futures contract. Of course, if you go for the CBOE, the Chicago Board Options Exchange, yeah, maybe that's a little bit better. I hope that answered your question, at least to an extent. All right, yeah, still no proper divergence on any of the US indices. Still continuing to form lower lows on all 3 charts. We still have a slight divergence here on a 500 time frame between the S&P and the tick grid right here. Let me draw it up. We still formed higher lows and lower lows right here on the S&P. So we still have that overall divergence. We took out Friday's sell side liquidity below Friday's low. We're now inside those few last remaining fair value gaps inside this higher time frame hourly fair value gap that's basically spreading from somewhere around here until down here to the 3,800 key level. So this would be the next major level to focus on. Ideally, what we'd like to see would be a pullback into one of those major fair value gaps somewhere around this area here on a 500 time frame, like this one right here, this one, or a retest of the DR IDR low, where I already have my alarms set. So I just have to basically watch my phone and wait for the alert to trigger, and then go back to my computer and check the chart and see if I see a valid entry opportunity or if I'm passing on this trade. What's the time now? It's 6:15. All right. Still inside those fair value gaps, we have this divergence on a tick grid. So far, since the last hour, nothing really changed, unless other than this nice short entry opportunity. But at this point of time, I did not look for a short. If I would have been aware of this major sell side liquidity below Friday's low, I would have certainly looked for a short opportunity also for the live stream and everything. But as of right here, I was still looking at this bearish bullish divergence based on the tick grid right here, making a lower low here and forming higher lows here. We on a lower time frame, we actually had a small change of character right here with a pullback inside of this fair value gap, which I tried to basically long it from or buy it from this level basically back into the IDR DR low. It did not work out. We got stopped out right here with this wick, and then we drew up this small volume inefficiency between those two candles, which we actually hold beautiful resistance from with a gap to the downside right here on a 1 minute time frame. Which would have been a very beautiful short entry with your stop loss maybe on this wicks on this candle's high right here for a 14 tick stop loss, targeting at least the sell side liquidity. But unfortunately, I was not aware of this major sell side liquidity up until the moment of right here. Otherwise, certainly I would have considered taking a short position from this volume inefficiency, especially since we shifted market structure back to bearish market structure right here with the structure break. Looking for a pullback continuation move right here. Could have worked out if you had this Friday low sell side liquidity on your chart. Otherwise, yeah, wouldn't have made sense to continue going for a short unless there's a major key level that price wants to be delivered towards to. So now we're below, and you could have kept on trailing your trade further down inside of one of those two fair value gaps, even if one further down for a 4 risk to reward trade. It was a great opportunity to take a short. Unfortunately, I missed it, but we caught a beautiful short trade already up here during the beginning of the New York kill zone, or the opening range here from 9:30, after which we got this massive move to the upside, which took out buy side liquidity. With buy side liquidity, I mean this liquidity above those relative equal highs from our yesterday's RDR range right here. And because the Asian and London range basically stayed within yesterday's RDR range right here, represented, let me get rid of this Fibonacci retracement tool, represented by this dotted line right here, and the dotted line that used to be right here, this one right here, basically stayed within our range for the whole duration of the day up until 9:30 market open, where we basically took out sell side liquidity first, then moved our way very quickly. Within 5 minutes we moved up above the buy side liquidity that was resting above those equal highs and above our RDR high from yesterday, retesting this consolidation here. And yeah, based on this idea, I entered short, I think, at the close of this 1 minute candle with my stop loss up here. Basically caught the high of the session. No, basically caught the high of the day, if you want to say it so, and we took profit right around this level. Yeah, you never know what you never know. And yeah, today's price action was rather simple with a beautiful downtrend. I wish I would have continued holding on to this trade, but it is what it is. You learn every day. And this should be the attitude. Beautiful short entry opportunity here. We now filled in this last, I think it was a 5 minute fair value gap here to the downside. Below this major sell side liquidity before we hit our next key level of interest, which would be the 000 level of 3,800. So on a 5 minute chart, let's see if we have any fair value gaps left behind or order blocks. I mean, any of those down close candles could be considered order blocks on the way. But so that's why I'm looking for fair value gaps right now. But I'd say other than those last 3 fair value gaps that we had on the way down, maybe, yeah. I don't know. I'd say if we break through those, next area of interest would be the 3,800 000 level. All right. Still no divergence between the indices. Nope. Let's close oil chart. It's not really interesting anymore. All right. 6:21. How long is the streaming going for? Hang on. 3 hours and 15 minutes. Nice. All right. I think I'm actually going to end the stream here. Otherwise, my dog might not hold it anymore. All right. So I hope you enjoyed watching the stream. And yeah, I'm gonna be streaming, I think, again tomorrow. Tomorrow is gonna be Friday. Yeah, I think tomorrow I should be able to trade, even though I'm really not interested in the price action between Christmas and New Year's Eve, just because of the volume and the lack of momentum most of the time. Of course, you could have caught a beautiful entry on a lower time frame today, even on higher time frames, does not matter. I just generally like to also have some time off. I mean, you don't have to trade every day, especially during, I don't know, time between Christmas and New Year's Eve. All right. I hope you guys learned something from the stream today. And if not, I'm gonna be back. If I'm not streaming tomorrow, I'm gonna be streaming during the next year. So basically next week, we'll see how the DR IDR concept and ICT concept works in 2023. Maybe it's not working anymore next year. Who knows? I'm kidding. But yeah, we will see. I wish you all the best. If I'm not live tomorrow for the next year, make sure to, I don't know, prepare your list that you want to change or improve on during the next year, especially for trading. And yeah, we're gonna smash it 2023, especially with DR IDR. The script has basically been released for a month or something now, maybe less than a month. So I think, yeah, we learned a lot during this month and all the price action, all the live streams from TheMas7er and my live streams. So yeah, I'm really keen for 2023. I hope you guys are too. And yeah, it's time to study, backtest, and smash it by the beginning of 2023. All right, guys, take care and trade safe if you continue trading during the PM session. Make sure that you be aware of the new hourly opening at 1 p.m. New York local time with new volume and everything entering into the market until the markets are going to close. Next area of liquidity after we took out Friday's low would be the key number level at 3,800. And our previous week's low sitting at 3,788 and half. Yeah, all right. So those are the next areas of interest. We will see if we get a pullback in some interesting fair value gaps around our DR low, maybe even a pullback to it. But I think therefore we need more momentum and volume coming into this market for a nice and sophisticated pullback into some interesting levels for a continuation move to the downside. Or you simply scalp the 1 minute time frame, like for example here, where we reacted beautifully above this sell side liquidity from Friday's low with this volume inefficiency for this continuation trade short. Also make sure to watch those fair value gaps from the 5 minute time frame below Friday's low. If we are forming a double bottom or a reversal opportunity from here, as of right now, I don't really see a reason for that other than a minor tick grid divergence for last time. Let's compare all 3 US indices. forming lower lows. There might be a divergence if we compare them all on a 1 minute time frame now. So we formed lower lows from 1217 until right now on the S&P. We did the same on Dow Jones, but we had a divergence between them three on Nasdaq, where we formed higher lows, and we did not follow this move to the downside. So we basically filled in this fair value gap here. So now we have divergence between indices at the end of the stream. But we will see if this is actually going to be the fair value gap we are going to bounce off from and maybe pull back towards our DR low, or maybe into some of the fair value gaps that are on the way to the downside. We will see. And yeah, guys, take care, and we will see us either tomorrow or next year. So trade safe, and yeah, trade safe. It looks like we're actually gonna be getting a small little reversal opportunity. So make sure to watch out for a change of character, fair value gap, re-entry short, especially with this nice little volume imbalance here and here. Who knows, as soon as we are going to break this high, we'd be looking at a confirmed change of character on a 1 minute time frame, of course. We have divergence between the tick rate and the S&P. We have SMT divergence forming between the US indices. So this could be actually, if we get a pullback, this could be a nice continuation entry long. All right, guys, take care, and I will see you next time.